Am I audible?
Yes, sir, you are audible.
Okay.
Okay.
You please tell me the time. Okay.
Yes, sir, we start 10 o'clock.
We just brought in another, sir. Yeah. Education.
Warm good evening to one and all presented here. On the 2 days seminar on like Indian stock market after COVID-19. Let us move on to paper presentation of panel, which is chaired by Dr. A. Rajagopal, Associate Professor and Head of the Department of Economics, Central University of Tamil Nadu, Tiruvarur. He has got 22 years of teaching and research experience. He published more than 40 articles in reputed journals, including Scopus Index. He consistently engaged in research and publications. He is awarded postdoctoral fellowship (PDM) from the Indian Council of Social Sciences Research (ICS), New Delhi. He received major research projects funded by ICSR and National Commission for Women (NCW), New Delhi. Dr. Rajgopal did his PhD from Gandhigram Rural University in the area of healthcare utilization. His area of research is in the field of development studies like healthcare, finance, inclusions, and self-help groups, tribal studies, etc. Sir, please.
Okay. Thank you. Thank you for the introduction. And most here, I congratulate all the participants, and I also congratulate all the coordinators, especially students coordinators, for doing a wonderful job. And thank you very much, sir, for inviting me for this, for sharing this important session, and about the relationship between stock COVID-19 and the stock markets. In fact, this is so wonderful in such a way that while talking from the point of view of economist, and we don't need to much analysis on a stock market, and I would say that stock market and its relationship with the or what's that, the COVID-19 or any other aspect. This is mainly because important reason because as Paul Krugman has been rightly been pointed out, generally say that stock market is not the economy. And 3 times he has been repeated the same thing. Stock market is not the economy. Stock market is not the economy. Stock market is not the economy. This is something which is very interestingly noted by the Nobel laureate, because the largest part of economy has been mainly consists of informal sector and MSME. So when a crisis like, of course, there is no problem, and there is no doubt in that actually COVID-19 is an important pandemic situation, like immediate after depression, where we have never come across such a serious situation like after Great Depression of 1930s actually. In fact, we have to take into serious consideration. But while looking into the stock market, because it consists of a large companies and bearing all kind of MSME in nature, or where 30% of the GDP has been contributed by MSME sector, the whole GDP. But that is exactly not representing in the stock market. That's a serious concern. But as a matter of academic interest, it is very, I would like to. That doesn't mean that I'm not saying that actually this company stock value has come down. That is not a major issue, but that is also a major issue in terms of employment and other indirect employment or direct employment in such sense, or profit value and all other diminishing returns and all those aspects. But while looking into the academic perspective, it's very interesting when you say that look at globally, immediately after 2019, WHO has been declared, I think March 12th or some March 11th, December, I think it has been declared as COVID has been a big pandemic. You could find the stock market has immediately come down. Even its reflections has also been seen in Indian stock market also, but immediately for over a period of time, one year period of time, it would be able to analyze that it has been recovered, and it has also immediately you could find that it has been recovered suddenly. Why? Because probably why this shortfall people have been analyzing. You must have having misinterpreted like the valuation of a stock prices largely in the Indian company stock prices largely. Okay, that is one of the reasons why it has been suddenly falls out. But over one period of time, you could find that it has been suddenly been recovered. That's a great thing and great news of that. While specifically looking into that, you could say that pharmaceutical and other related companies have a good stock and its valuation has been increased. But there are other companies like non-financial, for example, financial, or I would say that the housing financial related areas come down, and now it is declined also sharply, actually. So while in this background only, I hope you are going to discuss this kind of interesting topic, and there are so many hypotheses also being framed in this different context by different academicians, and I would say that the business people also. But I'm looking forward to your seminar and how much it has been value added to the entire issue, which has been a substantial issue which has been going to be discussed. So in this context, we have five people who have been trying to present related to outbreak of the COVID, okay, and its relationship with and its impact on Indian stock market. And I welcome each one of the participants. I'll read one by one later, and also for your discussion. And you'll be getting us 10 to 15 minutes for presentation. I hope the organizers, especially students, nice to see the students organizers here, and will take into consider this the timing very well. So the first participants in this row, I would say I call upon Dr. P. Chellasamy Muhammad and Juraji N for their presentation. They are from School of Commerce and Bharatiyar University. Coimbatore. The topic is related to the outbreak of COVID-19 pandemic and its impact on stock market volatility of listed airline companies in India. So welcome, please. I welcome the first or the first participants for this program. Thank you.
Thank you, sir. I am Muhammad Jurajian. I am
Ah,
presenting this.
welcome. You are welcome.
Thank you, sir. Thank you.
Please start with your presentation.
Is it visible, sir?
1 second. Yeah. Yes.
Okay. Okay.
Yes.
Thank you, sir. Sir, myself Muhammad Jurajian, and I'm presenting this topic on behalf of my guide, Dr. P. Chalasamy, sir. And the topic is the outbreak of COVID-19 pandemic and its impact on stock market volatility of listed airline companies in India. Introduction. In the year 2019 marked and will be remembered with the birth of novel coronavirus termed as COVID-19 SARS-CoV-2. It was a black swan event to the world as it was entirely strange. The WHO declared the outbreak of the coronavirus COVID-19 as a public health emergency of international concern that shocked the entire economy of the world. Some of the COVID-19 protocols implemented by the authorities to curtail spreading of disease and flatten the curve, like social distancing, mobility restrictions, and lockdown, which added to the concept of the situation. All these scenarios were not ideal for most of industries all around the world because of the pandemic, either directly or indirectly affected them. The pandemic also affected different industries in India, like it's affected the rest of as it is affected the rest of the world. One of the worst victim of this outbreak was the transportation industry, especially the aviation sector, as the mobility restriction directly affected this sector, and its uh, repercussions being seen in the Indian stock market indices. In this study, the researcher attempts to find the volatility of share prices, which is created by the outbreak on the shares of listed aviation companies in India, by analyzing past 4-year price movement of listed airline companies in India. Objectives of the study: to measure the performance, trend, and growth of share prices of listed airline companies in India. Two, to study the fluctuations in share prices of listed Indian airline companies before and after COVID-19. Research methodology. The present study is analytical in nature. This study is based on secondary data. Data are collected from various websites, journals, magazines, and so on. This study is conducted on stock prices of 4 listed airline companies in NSE. They are Interglobe Aviation Limited, Indigo, SpiceJet Limited, Jet Airways India Limited, and Global Vectra Helicorp Limited. Out of these, first two companies are from commercial freight operations in domestic and international sector, while the operations of Jet Airways is suspended from 17th April 2019. And the Global Vectra is India's largest private offshore and onshore air logistic helicopter company. The study period covers 4 years from 50th February 2018 to 14th February 2022, which is divided into two parts of 2 years as before COVID-19 outbreak and after COVID-19 outbreak. Period starts from 15th February 2018 to 14th February 2020 and 15th February 2020 to 14th February 2022 respectively. The reasons for selecting this period is to understand the situations prior to the COVID outbreak and to analyze the situation in the new normal period. The data were analyzed using descriptive statistics, paired t-test, and CAGR with the help of statistical tools available in SPSS and Microsoft Excel. Hypothesis: there is no significant change in the stock prices of listed airline companies before and during COVID-19. Then analysis, paired t-test. Then paired t-test mean of Indigo is minus 250.03 03, standard deviation 327.48, standard error 14.73, then t value minus 16.97, then significant value 0.000. Global spectra mean 24.388, standard deviation 31.068, standard error 1.59, t value 15.26, and p value significant value 0.000. Spice jet mean 62.13, standard deviation 14.70, standard error 1.33, then p value 46.465, then and the last one is 0.00. Jet Airways 162.126, 220.99, 9.98, then t value 16.24, then significant value is 0.000. The total p value is 0.00 for all the four companies, which is less than 0.05. Therefore, the null hypothesis is rejected, which means that there are significant differences in the stock prices of listed airline companies before and during COVID-19. Then the table showing second one, the table showing descriptive. This table is related with the descriptive statistics. The table showing average stock price of companies before and after COVID period. Interglobe aviation. Then total number of working days. This number of share traded days it was 494 days, and average stock price was 1,300 not 303. Then there is an absolute change of 253, then change in average change in price 19.44, then combined mean 1430.51, then after COVID value is 497 working days, and average stock price is 1557. Global spectra before COVID working days 416, then 75.07 is the average, then absolute change 22.54, and in percentage it is 30.02 percentage, and a combined mean of 64.33. After COVID average is 52.53. Then SpiceJet. Before COVID average is 112. After COVID average is 66.2. Absolute change is 46.02, and change in percentage is 41 percentage. Combined mean is 75. Jet Airways before COVID 490. Sorry, before COVID 231. Then after COVID 69.84, absolute change 161.98. Then percentage change is 69.87, combined mean is 150.41. Enterprise. The average stock price of Interglobe Aviation has increased during COVID-19 outbreak when compared with the average stock price of before COVID prior period by 19.44 percentage. However, for the remaining companies, it has been witnessed a drastic decrease in the average stock price when compared with the average stock prices of before COVID-19. The highest decrease has been found in Jet Airways minus 69.87, and the decrease in stock price after COVID-19 also negatively affected the combined mean of the companies except the Indigo. CAGR calculation. Indigo. Opening price before COVID and after COVID. Then before COVID, CAGR is 6.79. After COVID, 19.88. And the 4-year CAGR is 13.47. SpiceJet, it is not calculated for the prior period as it is only traded for 5 months. Then during the COVID, it is minus 17.52 percentage, and here it is 31 point minus 31.51. Then global vector. It is minus 38 point in during COVID-19, and in after it is 0.32 percentage. There is a small increase of fraction of paisa. Then it is 4 year CAGR is minus 22.09. In the case of Jet Airways, it is minus 80 before COVID, and now it is minus 23.36 percentage, and combined CAGR is minus 42.68. Interpretation. The table shows that CAGR of Indigo for a period of 2 years has been increased after COVID outbreak period to 19.88 percentage from 6.79 percentage. 4 year CAGR also show a positive figure of 13.47 for the same company. In the case of Global Vector and Jet Airways, there is a positive CAGR of 0.33 percentage and 23.36 percentage respectively. However, the 4 year CAGR of both of them are negative. Conclusion. In this study, the researcher attempted to find out the impact of COVID-19 on stock prices of listed airline companies in India. The data were collected from 2 periods as prior to COVID-19 outbreak and during COVID-19 outbreak. During Before COVID-19, only Interglobe Aviation showed a positive movement with a CAGR during pre-COVID period of 6.79, whereas all other companies have come up with negative marks. CAGR of Jet Airways showed a highest decrease with minus 80.89 during the COVID period, that is from 739.95 to 27.25. However, while analyzing the value, the internal issues which led to the suspending of the operation from April 17 to 2019 have to be considered of Jet Airways. That may have an impact on the decrease falling off. Mean average of stock price in the 2 periods also shows decrease during the COVID outbreak period. In all companies except Interglobe Aviation, it show a negative effect of COVID on the stock prices of all these companies. Thank you.
Thank you. Thank you. It's a very very good presentation actually, Muhammad
Thank
Zuraj.
you, sir.
And you have done a
Thank you, sir.
and t-test. In fact, t-test is the right test which you have played it between before and after COVID. And
Thank you, sir.
it's a very the kind of airlines which you have chosen also right. And in fact, because of the price, the price figures are available. It is easy to calculate. In fact, both
Yes, yeah.
before and after, and it's so interesting to note that actually the Jet Airways has faced some of important issues during the time of COVID-19. However, I hope the other airlines probably comparing to I think the other airlines has done better. No, that's what you are.
Yes, Indigo is
Yeah,
made a better performance.
yeah. Indigo is made.
Even during the COVID outbreak, sir.
Yeah, yeah. Indigo is made. That's a. I think from the management point of view, also it is a good case study which you have to look into. Why how it become probably Indigo become made a better performance even during a COVID situation,
Yes,
and
yes.
that just got a lot of scope in publication aspect too, angle too. So try to publish your work,
Okay,
bit
sir.
more goods and other things, and all theoretical background also incorporate. Okay,
Okay.
good work.
Thank you,
Very
sir.
good.
Thank you, sir.
And
Thank you.
I request the participants if you have any questions to ask. 1 minute for discussion. If any question is from the participants. Okay, if there is no other questions, I think we'll move to the second participants. And here we
Thank
have
you, sir.
thank you.
Okay, thank you, thank you.
Okay. And participants and Vishnu C and Rimchat and Dr. Vishalakshmi. Okay, and their topics are related to study on investors' attitude towards equity market during COVID-19. It's an important topic, and they are from Department of Management, the Central University of Tamil Nadu. Okay, and looking forward with your presentations. Thank you. please.
Good morning, sir. Good morning, everyone. So, our presentation is on about a study on investors' attitude towards equity market during COVID-19, and myself, Vishnu and Rinshad, and we are presenting on behalf of our guide, Dr. S. Vishalakshmi, ma'am, Department of Management, Central University of Tamil Nadu. So our papers examines the impact of COVID-19 pandemic on the investors' attitude towards equity market measured by their buying behavior during these periods. And the analysis is aimed at discovering how this COVID-19 pandemic affect the buying behavior of investors. And we use a judgmental sample of 100 investors for the study, and the data was analyzed using percentage analysis, and the hypothesis we tested using chi-square test. And from our study, we have found that male investors shown more interest towards this study, and the investors' psychological attitude about the stock market, whether good or negative, can influence the economic outlook. Next slide, please.
Voice is not coming.
Sorry. Am I audible now?
Yeah, you are audible.
Yeah. Richard, next slide. So, sir, some technical issues, sir.
Okay.
Sir, can I continue without slide?
Yeah, that's fine.
Okay, sir. So for our study, we use three objectives for our study. Like first one is about to identify investors' attitude towards different stock in the stock market during COVID-19. And next objective about to identify factors that encourage investors to consider for investing in the stock market during COVID-19. And the third objective is about to identify the factors affecting investment behavior during COVID-19. And for this study, we have gone through many research paper, and we took mainly 6 papers. And the first one is about a study on impact of COVID-19 on investor behavior of individuals in a small town in the state of Madhya Pradesh, India, and it is by Arpit Gurpani. And second is about investor sentiment and the near-term stock market. Third paper, the impact of COVID-19 outbreak on the Indian stock market. And fourth one, determinants of stock market investors' behavior in COVID-19, a study on Pakistan Stock Exchange, and the nexus between COVID-19 fear and stock market. And last, investor sentiment and stock price, empirical evidence from Chinese SEOs. And all these paper were helpful for us for our study. And next about our research methodology. A quantitative study was conducted with the study's target audience being people over the age of 18. To collect primary data, a set of questionnaires was designed for investors who had made stock market investment, and we used a judgmental sample of 100 investors to collect primary data. A structured questionnaire using a 5-point Likert scale was utilized, with a strongly agree, neutral, disagree, and strongly disagree as 5, 4, 3, 2, and 1 respectively. The data was analyzed using SPSS software, and the hypotheses were evaluated using the chi-square test. And we have set a research hypothesis that there is association between gender and attitude of investors towards different stocks in the stock market during COVID-19. And our findings based on the studies like to identify investors' attitude towards different stocks in the stock market during COVID-19 by the questionnaire method. And we have found that that majority of our investors have agreed to the various questions that have asked. And investors shift their reference price gradually when they get new information. And this is the factor in which most of the investors agreed. And like investors like to involve in new risky investment. This is the factor in which the majority of the investors disagree. And this is the graph about showing that majority of the investors were prefer that their reference price gradually. In this factor, they have agreed most, and the fact and the investors like to involve in the new risky investment. This is the factor in which majority of the investors disagree. And for the next factor, we have considered the factors that encourage investors to consider for investing in the stock market during COVID-19. And we also use percentage analysis to find out this. And we found that majority of the investors prefer the regular income. It is the factor that encourage them for investing in the stock market during COVID-19. And interest rate and tax benefit. These are the factors in which the investors disagree, that these are not the factors that encourage them for investing in the stock market during COVID-19. And for the third objective, we consider that factors affecting investment behavior during COVID-19. And we also use percentage analysis to find this. And we have found that a majority of the investors prefer that volatility is the factor that affecting investment behavior during COVID-19. And depression, it is the factor that majority of the investors disagree that these are not the factors that affecting investment behavior during COVID-19. And also by the chi-square test, we have found that there is a link between gender and investment attitude regarding certain stocks in the stock market, because many of the male investors have shown more interest towards this research. And we can conclude our paper by this research paper examined investors' attitude towards equity market during COVID-19. The majority of the investors agreed to the attitude measurement, and it is apparent that investors had little interest in the stock market during the pandemic, as many were afraid and had little faith in the stock market, as they were unsure if the stock market's performance would improve or not. And our suggestion and recommendation suggest that stock markets are in a state of flux, with investor sentiment reflecting a potential scope and speed of disaster. Governments and policymakers should develop domestic and international measures to deal with this unpredictability. Investors should have trust himself and don't believe in others' word and invest. If an investor tries to invest just after the pandemic has ended, it will be a waste of time, because no one knows when the pandemic will finish. Therefore, we must live with it and make investment decision accordingly. That's all about our research paper. Thank you.
Thank you. Thank you for Vishnu for the presentation. And of course, it is you are looked into a very important and aspects of attitude of the investors' attitude towards equity market. It's generally we have to study with how does its implications during the COVID situation also very important to assess. Generally, people say that that is the right time to invest when the stock prices has come down, and that's the right time to invest. There are so much of argument in that aspect. You also looked into that gender point of view also. And
Yes, sir.
chi-square test, I don't know whether the chi-square test is the right test there to applicable. You have to see that, because one hand you have taken the gender is fine. The other hand you have taken the Likert scale, because both the what's called you have to take a categorical variable. Both the in a chi-square test, one of the important norm is like that. You have to look into the categorical variable. Both the variables should be categorical. So kindly look into that. Actually, probably you will get more answers to that. And also, it is better you can go for a normality test, because while looking into judgment sampling alone won't sufficiently cater the needs. looking into purely from the research point of view, you have to look at the what's called the normality test also. KS test and all, you have to look into that so that you can prove that your sample size is right. Normality behavior has been maintained. That also please kindly look into that. But overall, it is a very good presentation, and where people are the attitude is an important thing matter,
Yes, sir.
whether especially during the COVID season or such crisis comes, how the people has been responded has to be taken very seriously. Thank you for the presentation. Any other questions?
Thank
I'll give you 1 minute for presentation, or if you want to reflect on anything, you can do. Thanks. Any questions? No. Okay, we will move to the. Thank you, Vishnu, for the presentation.
Sir.
Okay. Next, we have P. Chellasamy and N.S. Bala, okay, and Supriya. And their topics are related to an empirical study on factors determining the price movements of select sectors listed in thematic indices by using data panel regression analysis. Okay. It's good to see that actually from Bharatiya University School of Commerce, some of the technical papers are coming. Some of the statistics has been directly involved in that. I'm happy to see that actually. So I'm looking forward that panel regression analysis about your presentations. Okay, nice. Thank you. So you can please start with the presentation.
Thank you, sir. Good morning to one and all present here. Sir, is my PPT is visible?
Yeah, it is visible. It is visible, Chellasamy.
Thank you, sir.
What's your name?
My name is N.S. Balanimoshini Supraja.
Balan emotional. Okay.
Good morning to one and all present here. I'm going to present the topic on an empirical analysis on factors influencing the price behavior of select sectors listed in thematic indices of NSE under the guidance of Dr. P. Chellasamy, sir, Department of Commerce, Bharatiya University. Introduction. Stock market is an assemblage of investors and trader of stocks which represents proprietorship claims on business, as they may include securities listed on stock exchange that is traded privately. Indian economy is the third largest in purchasing power of stock, and it is going to reach heights in next upcoming decades. Global investment banks such as US, China, UK will grow 60% of size and cross the current milestone of 9% GDP in the booming economy by passing many phases. But India has a lack in developing the economy due to many global clues. Movement in the stock market also have an overpowering impact on individual customers too. Collapse in share prices have the dormant to cause widespread economic interference. The movement of stock price is highly initiative to economy as well as many other factors which are unforceable and imperceptible. Fundamental factors plays predominant role in the performance of stock market. As the economy is globally merged, domestic variables also has a depends upon the global events. The major factors affecting the stock markets are interest rate, exchange rate, and currency fluctuations, and so on. So the common external factors are also a barrier to the Indian economy. As financial asserts, the movement in the stock market are related to macro level economic indicators. It is important to recognize the economy as a whole in the future. Statement of the issue. Living in the ever changing world of globalization, technological advancement with uncertainty, increased liberalization, and financial distress have led to fluctuations and skepticism in the financial market. Many of the new and aspiring investors fall short in understanding the stock market, getting confused and often frustrated, leading them to make mistakes and incur losses. In recent days, India has faced a great depression due to COVID-19, which causes economic depreciation of money value, fluctuation in consumable goods, surging oil prices, foreign capital outflows in the Indian market. After the crisis and fall down in recent times, Indian stock market exchange is still down due to major fall of COVID-19, and it also has a significant influence on GDP, interest rate, money supply, etc. So the study aims to focus on the factors that are determining the stock price fluctuations, which are listed in thematic indices of NSE. research objectives to examine the factors influencing the price behavior of select companies listed in thematic indices of NSE. Some of the hypothesis has been framed based on the research objectives. Tools used for the study is data panel regression analysis. Methodology: the study is purely based on secondary data, which is collected from the websites of NSE, Ministry of Statistics and Programs, implementation of various published and unpublished theses and journals. The study covers a period for 2 years, from 2020 to 2022. The companies which are selected in thematic indices have been identified based on the market capitalization. The select companies are Ultratech Cement, Berger Pines, Indian Oil Corporation, Page Industries, Oil and Natural Gas Corporation, Power Grid Corporation Limited. And the factors which is highly affected during COVID has been identified. That is GDP, money supply, inflation, COVID cases, and interest rate. Analysis and interpretation. For selecting the data, data panel regression has two analysis, that is fixed effect model and random effect model. For each model, we have to test the Hausmann's test, which model is suitable. So I have used a Hausmann's test of Ultratech Limited. The probability value is less than the significant value, hence the hypothesis rejected, and it is focuses on fixed effect model to exploit the changes in the share price. The results of fixed effect model for Ultratech is interest rate has a highly significant influence on Ultratech share price. Then Hausmann's test of Berger Pines, it is more than the significant value 0.05. Hence, the random effect model is appropriate. The random effect model, GDP and the COVID cases have a significant impact on Berger Pines. Whereas Indian Oil Corporation's Hausmann's test, it is more than the significant value 0.05, and the random effect model is appropriate for this IOCL. And money supply COVID cases has a significant influence on IOCL share price. And the Page Industries has is less than the significant value 0.05, and it is appropriate for fixed effect model. And the COVID cases and GDP has a significant influence on Page Industries. Whereas Natural Gas Corporation Limited has less than the significant value 0.05 on Hausmann's test. Hence the test is appropriate for fixed effect model. And the fixed effect model, interest rate and inflation has a significant influence on IOCL share price. And for Power Grid Corporation, the hypothesis value is less than the significant value, and it goes on fixed effect model. And the Power Grid Corporation has a significant influence on inflation and interest rate. Then conclusion. Discussion and conclusion. Stock market is one of the essential market playing a crucial role in the economic success that helps in fostering the capital formation and imperishable economic development. During the year 2021 to 2022, the market faces many crashes due to COVID-19 and fluctuations in the crude oils, upsurge in petroleum and diesel crashes, and diesel price, and crashes in Russia-Ukraine war also has a significant influence on the economic factors. So the companies like Ultratech, Power Grid Corporation, ONGC, and Page Industry has a greater impact on GDP, inflation, and COVID cases. Hence, the investor are requested to buy back their shares for short-term profit, and they have to hold the shares till the market gets stable. Then IOCN and Page Industries have a powerful positive indicator with respect to profit from the share market. The investors and portfolio managers are flattering of information. As the in Indian stock market is booming day by day, the studies need to be administering to gain more understanding on the price behavior and serves investors portfolio managers for making rational investment decision. Thank you.
Thank you.
Thank you, sir.
Thank you, Nimoshni. It's a very good presentation, and I would like to say that actually some of the, from economics point of view also, like some of the important points like interest rate and GDP, money supply, okay, and all these monetary policies, all those things have got a high impact on share prices of different companies. It is nice to say that actually now you have a data, even you are done with the panel regression analysis, both fixed and random effect also being tested, and before you are going to come to conclusion. I hope you are a PhD student. Or?
Yes, sir.
Okay, good that now you are doing good work in that area. Okay, and happy that you could able to identify certain factors determining the price movements. Okay,
Yes, sir.
movement, and further upon probably you can also search for something like what are the reasons, again searching for some of the other reasons for that also, whether any other factors also influencing over a period of time. But overall, like I like that topic very much. Okay, very interesting topic, and you have done good work, very good work. Okay, and
Thank you.
yeah, and problems are also identified, and you are correctly linked with the share prices and different aspects. Thank you for remind us for the such an important topics and identifying those factors. That so any
Thank you,
questions
sir.
from, yeah, any questions from the audience? Okay, then no question from the audience. So these are all some of the important topics, interesting topic. Who is your guide actually? Nisha, Nimoshini.
Sir, Dr. P. Chellasamy, sir,
Class.
from Bardiyar University.
Okay. Convey our regards to sir.
Thank you. Sir. Okay, sir. Sure.
So next we have Sagar Sharma. Okay, and on impact of COVID-19 on the National Stock Exchange, the specific reference to selected sectors. So now I invite Sagar Sharma for the presentation.
Yes, sir. Good morning, sir.
Please.
Sir, my screen is visible.
Yeah, visible.
Okay. A very good morning to all. Myself, Sagar Sharma, and my research paper presentation on impact of COVID-19 on National Stock Exchange with a special reference to selected sectors. So first we see introduction. We can see that the COVID-19 is an infectious disease caused by severe acute respiratory syndrome coronavirus 2. The first case was identified in Wuhan, China in December 2019. Since then, the disease has spread around the world. Disease has found the world causing an ongoing pandemic. It has affected the social as well as economic life of the people as a whole, and not only at micro level but also at macro level on the economy of the country. If we see its impact on economy, then we can say that it has affected the economy in both the ways. We can say first or second, impacts of corona can be seen on economy in different aspects. Stock market is one of them. Indian stock market is one of the parameters to check the performance of the Indian economy. The stock market is affected all over the world. The share price of the several companies' share had dropped very frequently. Indian stock market is also affected by the all two waves of COVID-19 and faced many ups and downs in these phases. Now we can see the what are the review literature that I have gone through. I have mainly gone through three main papers which are mainly related to my that topic, that the study of COVID-19 with special reference to lecture sector. First is Yasraj and Renuka employed the different model to study the short-term impact of COVID-19 on Indian stock market, and they summarized as that all the sectors were impacted temporarily. Yet the financial sector faced the worst. And Liu employed event study methodologies. They analyzed 21 leading stock exchange and concluding that the COVID-19 outbreak had a significant negative impact on the stock market of all affected countries, with Asia recording a greater decrease in terms of abnormal returns. And at the last, Horjo, who used event analysis to show the strong negative impact. Event analysis is very technical tool to know the impact of any severe disease on the global markets, especially emerging markets and small firms. According to that study, large firms and US stock market recorded positive abnormal returns compared to the other emerging market economies. Now we can see the objective of my study is executed to know the performance of National Stock Exchange during the two waves of COVID-19 pandemic, first and second wave. Now we can see what is that the significance of this study. The current study is important to know the impact of COVID-19 on the performance of NSE, National Stock Exchange. The study will be helpful for various stakeholders related to NSE. Now we can go through the research methodology. The data will be used only secondary data through of national selected. There are Nifty Bank, Nifty FMCG, Nifty IT, Nifty Pharma, Nifty Financial Service, and the simple random sampling is used, and the time frame is very important in this case, as uh, as I told that the study is for first or second wave. So first wave 30 January 2020 to 30 June 2020 during first wave, and 5 October 2020 to 31st May 2021 during second wave. Now we come to the data analysis part. Now I have categorized this data sector wise. There's I told I took 6 sectors. So first, one by one, we see impact of COVID-19 on Nifty 50 during first wave. So we can see date, closing price, share traded, and turnover. So we can see that is impact of COVID-19 on Nifty 50 during first wave, and it is impact of COVID-19 on Nifty 50 during second wave. Now we saw what is this. Nifty 50 is fallen by 40%, 14% in the first wave and rises by approx 36% in the second wave. And the trading of shares in this index is raised by 4% approximately in first wave and declined by 18% approximately in second wave. The turnover rises by 41% during wave and also rises by approx 5% in during second wave. COVID-19 impacts Nifty 50 negatively in the first wave but positively in the second wave. Now, second sector is Nifty Bank. Impact of COVID-19 on Nifty Bank during first wave and second wave. This green amount shows positive change and the red amount shows negative. So we can clearly see what is this. The Nifty Bank is fallen by approx 31% in the first wave and rises by approx 59% in the second wave. The trading of shares in this index is declined by 11% in the first wave and rises by approx 17% in second wave. The turnover is declined by approx 85% during first wave and also declined by approx 10% in during second wave. So COVID-19 impacts Nifty Bank negatively in the first wave but positively in the second wave. And the next sector is Nifty FMCG. That is a chart of Nifty FMCG during first wave and during second wave. So we can conclude that the Nifty FMCG is fallen by approx 3% in the first wave and rises by 17% in second wave. The trading of shares in this index is raised by 90% approximately in first wave and also rises by 115% approximately in second wave. Turnover rises by 36% during first wave and also rises by 62% in during second wave. COVID-19 impact Nifty FMCG negatively in the first wave but positively in the second wave. Now, the next one is impact of COVID-19 on Nifty IT during first wave or second wave. So we can see the Nifty IT is fallen by approx 10% in the first wave and rises by 30% in the second wave. The trading of shares in this index is rises by 37% approximately in first wave and declined by 79% approximately in second wave. The turnover is also rise by approx 19% during first wave but declined 72% in during second wave. So we can see COVID-19 impacts Nifty IT negatively in the first wave but positively in the second wave. Now we can see impact of COVID-19 on Nifty Pharma during first or second wave. So we can conclude here the Nifty Pharma is rises by 21% in the first wave and also rises by approx 25% in the second wave. The trading of shares in this index is declined by 15% approximately in first wave and rises by 6% approximately in second wave. The turnover is also rises by 10% during first wave and also rises by 24% in during second wave. So we can say COVID-19 impact Nifty Pharma positively in the first and second wave. And the last one is COVID-19 impact on Nifty Financial Service during first or second wave. So we can see the Nifty Financial Services fallen 20% in the first wave and rise 52% in the second wave. Almost double हो गया है. The trading of shares in this index is raised by 86% approximately in first wave and declined by 13% in second wave. Turnover also rises by 72% during first wave and also rises by 17% in during second wave. COVID-19 impacts Nifty Financial Service negatively in first wave but positively in the second wave. So after discussing all this, we see what are the findings of our research. COVID-19 has a negative impact on all the selected indices except Nifty Pharma in first wave. However, in the second wave, all the sectors showed positive growth. During the first wave of COVID-19, Nifty Bank was fallen drastically, but it rises rapidly in the second wave. All the selected indices start recovering from first wave of COVID-19 that was very severe. During the first wave of pandemic, investors prefer to invest in pharma stock as index of Nifty Pharma risen by more than 20%. During the first wave, investors avoided to invest in banking stock as trading in Nifty Bank fallen by 30% approx. However, during the second wave, investors invest in Nifty Bank index. Now we see what are the conclusions. The COVID-19 pandemic has huge impact on National Stock Exchange and initially it impacts negatively on National Stock Exchange. The indices related to Nifty Pharma showed positive impact of COVID-19 and Nifty IT and Nifty FMCG performed in a good manner as compared to other indices in first wave. The initial reaction of the COVID-19 on indices very bad and investor had to bear loss around a huge part of their investment. But later on the market start to revive and the different indices perform a slight better in the first wave. While in the second wave, the COVID-19 did not affect as much as that of the first wave. So Nifty Bank and Nifty Financial Service were the top gainer among the selected sample in the second wave. And the top gainer of first wave is Nifty Pharma did not perform like the first wave performance. So these are the references. Thank you so much.
Thank you, Sagar, for a very nice presentation. At another important presentation, and you are from which university? DEI. What is that? DEI. Dandinian.
Dayal Bagh Educational Institute, deemed to be University, Agra.
Okay, very good. Actually, okay. And so, thank you for the presentation for a sectoral-wise analysis. Actually, the globally also this has been approved. Like three important industries like IT and pharma and FMCG companies have done well even during the COVID time also. So your study also again substantiating the same thing. Like the three important sectors have been done well during that period, but overall, all the industries could also able to revive after a very short period of time. In fact, it has been very interesting to note that in your presentation, like short time, whatever may be the crisis, this crisis is only very short time period.
Yes, sir.
Especially in stock markets, that's a great thing which one has to understand. So, which means that doesn't have any kind of a long term effect on economy. So in Indian economy, Indian stock market also proved the same in tune with the same line. So that is very significant. And you are done with the percentage change in change. So that is also very good. It is also would have been nice if you go for some statistical test like to understand the significant change. Probably you can modify on that aspect, which I personally feel like that, rather than changing the percentage change. But how far this changes is significant. Okay, significant.
Yes,
That
sir, yes.
probably you can look into while preparing for your article or other aspects that may be raised. And you have done with a very background and literature methodology. All those things are good, very good. Enjoyed your presentation. Okay. And sector-wise analysis, in fact, that is a thing which we are really looked into it, the future perspective also, especially this pharma and pharmaceuticals and IT sector, how it has been, got an edge over the other companies. It's a matter of interest to look into that actually. Thank you for the
Thank you so much, sir.
Nagarjuna, please start.
Good morning, sir. Am I audible?
Yeah, yes.
Good morning, one and all. I am Dr. P. Nagarjuna from School of Management, MB University, Tirupati. Thanks to the convener and organizers of this ICSSR sponsored online two-day seminar on Indian stock market after COVID-19, organized by Central University of Tamil Nadu, for providing me this opportunity to present a paper on impact of the pandemic on Indian stock market, a study on volatility of NSE. This COVID-19 discovered in Wuhan, China, in pandemic, a worldwide emergency of March 2020. This pandemic impact had a tremendous impact on global financial markets. According to majority of the services, this impact available in the short term, significant in the long term. Volatility rises when the financial markets are influenced. This research paper looked at the volatility of NSE by using data from Nifty Volatility Index for a 2-year pre-pandemic and 2-year pandemic scenarios. The flow of the presentation is designed in the following sequence: introduction followed by summary, the review summary, followed by the research questions and problem statement, objectives of the research, methodology, research results and implications, conclusion and scope of the future research. The COVID-19 epidemic had a significant influence on global financial markets. Due to pandemic impact of COVID-19, the Indian economy saw a significant decrease of 4.5%. In the pandemic situation, the spread of virus, economic activity was lessened, disposable income came down, negative sentiments from the investors resulted in a steep downfall of stock markets. Financial markets all around the world experienced a dip as investor confidence was broken as a result of the widespread of virus. On 23rd March 2020, Nifty 50 index closed at 7610.25. On 20th January 20, Nifty 50 index recorded high at 12,430 and reduced to 7,610.25 23rd March. On 21st January 2020, Nifty 50 index went on to hit all-time high of 14,753.55. It is 193.86% increase. The decline was totally recovered in 10 months. On 22nd December 2021, Nifty 50 index closed at 6955.45 points. To compare with Nifty 50 index, data on percentage change in volatility index was collected on the same dates. Regardless of the pandemic, the volatility index has been dropping, and on December 22nd, 2021, the change was negative. Coming to the review of literature, the review of literature is done in three phases by considering the works that were done on impact of terrorist attacks in stock markets, impact of SARS and Ebola on stock markets, impact of COVID-19 on stock markets. In some of the works done by Dola Babu in 2017, he found that there is no discernible change in the volatility across a 6-year period. The research investigation of Rashmi Chaudhary, Preeti Bakshi and Hemant Gupta in 2020 comprised the composite indices of India with 3 global indexes, S&P 500, Nifty 225 and FTSE 1200, 2 composite indices, BSE 500, BSE Sensex, 8 sectoral indices of BSE. Summarizing the literature review, in 2003, Taiwan's economy was ravaged by severe acute respiratory syndrome, that is SARS epidemic. The global economic effect of the COVID-19 epidemic, as well as the Indian economy, has been significant. During COVID-19 outbreak, the Indian stock market was very volatile, with one period Nifty outcomes having significant impact on the future market volatility. COVID-19 virus re-emergence in Beijing, China had a short-term detrimental impact on tourism businesses. Stock markets throughout the world reacted badly to the abrupt shock caused by terrorist attack, viral attack like SARS and COVID-19. The markets slowly recovered. Some studies yielded conflicting outcomes. Based on the literature study, the following are the research questions. In a pre-pandemic context, what was the average volatility index? How much does the volatility index vary on average in the pandemic? In a pre-pandemic condition, what was the average variation in the NSE's volatility index? What is the average variation in the volatility index during the pandemic? Based on this, the problem statement can be framed as follows. The influence of COVID-19 on stock market movements is a source of misunderstanding in the study results reported by several researchers. Majority of the research studies concluded that the influence is negative in the short term, but not significant in the long term. When financial markets are impacted, volatility is discovered to be higher. To validate the influence of COVID-19, the researcher proposes to investigate and analyze the average change in Nifty volatility index before and during the pandemic, and to do the analysis of the volatility index between pre-pandemic and during the pandemic scenario. The objectives of the research are framed the following way: to determine the average change in the Nifty volatility index prior to the pandemic, to calculate the average change in the Nifty volatility index during the pandemic, to measure the average volatility of the Nifty volatility index in the pre-pandemic condition, to ascertain the average volatility of the Nifty volatility index in the event of the pandemic. Coming to the methodology, this research is primarily based on secondary data. The data on Nifty volatility index is taken from the official website of NSE. Literature reviews carried out from the published research papers in different journals. Most papers were published in 2020. This table depicts the number of transactions in pre-pandemic and during the pandemic period. The data on percentage change in volatility index was collected for the trading days for the years 2018-19 as the pre-pandemic period, 2020-21 till 16th December 21 as during the pandemic period. Percentage change of volatility index day-wise for the specified years was downloaded and classified yearly, half-yearly, and quarterly according to the calendar year. Coming to the results and discussion, the percentage change in the yearly Nifty volatility index during the pandemic period was identified. Descriptive statistics, namely mean, standard deviation, coefficient of variation, one-way ANOVA, two-factor without replication, and Carl Pearson coefficient of correlation, test of correlation applied for the purpose of analysis. And Excel tools are also used in the process of analysis. If you just look at this table shows the results of the percentage change in the yearly Nifty volatility index pre and during the pandemic. The percentage change in the volatility index is taken for the selected periods 2018, 19, 20, and 21. And another single factor Excel tool, using Excel tool is used to test if there is a significant difference in the average percentage change in the volatility index among the years at the 5% level of significance. There were 246 protocol trades in 2018. 245 in 2019, 251 in 2020, 237 in 2021 till December 16. It is revealed that the p value is higher than 0.05, indicating that there is no significant difference in the mean percentage change in the volatility index between the pre-pandemic and the pandemic scenario. Assumed to confirm that epidemic volatility is almost negligible. Like this percentage change in half-yearly, that is July to December Nifty volatility index in pre and during pandemic was computed. Coefficient of correlation for the second half was also computed. Percentage change in quarterly, that is January to March, April to June, July to September, October to December. What we call a Nifty volatility index pre and during the pandemic was computed. Coefficient of correlation was computed for the second quarter, third quarter, and the fourth quarter. And the coefficient of variation is also computed yearly, 2018, 19, 20, 21, half yearly for 4 years and quarterly for 4 years. So this is how actually analysis is carried out. And coming to just look at here, ANOVA two factor without replication, significant difference in volatility. It is found that there is no significant difference in CV, both rows and column weights. It implies that the CV is more or less the same irrespective of the rows and columns. Also, CV has not increased substantially during the pandemic when compared to that of the pre-pandemic period. So beyond by all of this, there is really no correlation between the intensity of the epidemic and stock market movements. Some of the protocol topics that can be taken up for the future studies include an analytical examination of the influence of COVID-19 on fixed nation stock markets, a comparison of the impact of a pandemic on Nifty 50 equities and few commodities like crude oil and gold, the impact of the epidemic on the stock markets of advanced and emerging economies, comparative analysis of stock market investors and traders, perceptions of the impact of COVID-19. Thank you. Thank you for giving this opportunity.
Yes. Is it audible?
It's audible.
Nagarjuna, are you able to hear?
Yes, sir. Yes, sir.
Sir. What about the coding? No information from. Then, okay. So, except that, actually, entire, I mean, presentation, actually, it was a very nice presentation, Nagarjuna, and, a very concrete conclusion with your presentation. And you have done all kind of, strategies like, ANOVA test, correlation, and all the things. Then you have tried to prove that actually where volatility of index, whether it has been changed. I mean, volatility has been index has other change, or how does it reacted on pre and post pandemic situations. And you finally you come to a conclusion that actually there is not much change. That's what I hope actually that was the final conclusion, which I guess in the last concluding part which you have done actually. And that's a fine conclusion, because actually you could find that overall presentation there is a sectoral differences are there with the changes in the changes, but at the same time when you look into overall index, okay, changes in the volatility index, and there is no such significant change has been done. So that really shows that the pandemic has not that of much impact on the stocks. Okay, stock industry, especially in Indian stocks, it has not that much of impact has happened. Though while looking into Air India or a pharmaceutical or some of the specific sector-wise companies, you could find that there are changes. Okay, wide changes or with changes are there. But overall, when you're looking into the index sector, that has not been that much of impact. That is what Nagarjuna has nicely been presented. And thank you very much, Nagarjuna, for your, and
Thank you, sir.
Rajendra Prasad, Dr. Rajendra Prasad, for your very nice and informative presentation. For a finest, I think you have gone for a fine, very good conclusion of the overall conferences also, all this session also. Thank you for your valuable comments and valuable
Thank you.
participation in this, and keep working on that area. It's very interesting to
Yes,
see
sir.
your
Thank
paper
you,
in
sir.
different journals, which I could able to probably see from here. Okay, all the best, all the best,
Thank
all the
you.
participants, and thank you very much for your any questions from participants. I have not seen any questions, and not, some questions may be encouraging for the participants also, and I mean the presenters also. Okay. If there is no question, I think overall all the five presentations was good, and they have done a very justice to their presentation, and different aspects of sector-wise and overall, and attitude. Everything has been analyzed in a very interesting way, and also with all statistical tools has been applied. And thank you very much for your presentations, and definitely please keep in touch with our university. Okay, those who are from outside, and share your expertise, and academic discussion should take place. Okay, and thank you for the organizers and Belmurugan sir, and for your for inviting me, and thank you very much.
Now the paper presentations has to an end. On behalf of the organization committee, the students of the Department of Commerce and University of Tamil Nadu, we wholeheartedly thank you, Dr. N. Rajgopal sir, for sharing the session. Sir, we thank you for your timely cooperation and
Thank you to see that
Thank you,
actually
sir.
students are actively participating and coordinating things. Okay, thank you.
Yes. Sir, one small announcement to participants. Dear participant, technical round 4 session will start very soon. Please be online. Attendance will be strictly monitored by organizing team. Thank you, participants.
Hello, am I audible? Hello,
You're using campus.
no. Hello, hello.
Hello, participants. Whether our voice is audible to you people?
Yes.
Sir, can we start? Did you say campus platform?
Hello.
Sir, are we able to, sir, you are audible to us. Whether the volunteer voice is audible to you, sir? Now, the paper presentation has to add Sir, are you able to hear us, sir? What happened to phone? Come fast. Hello. Mohinuddin, sir, can we start?
Hello.
Sir, can we start?
Sir,
I'm audible.
Now you are audible, sir.
I'm audible, right? Okay. My screen is visible. Can you confirm it
We
just a
start.
minute?
Yes, sir.
Just a minute.
Are you owning your video, sir?
Yeah, just a minute. Just a minute.
Not yet, sir. We will just check, sir. Sir, there will be an option for sharing the screen. You can just click on that, so it will be visible. So screen is not visible yet.
Hello. Anyone can answer, please.
Sir, you're audible, sir. Are you able to hear? Sir? Yes, sir. You are audible.
I'm not. Yeah.
So you can share your screen. Whether it is visible or not, we will let you know, sir.
Just a minute. Can you confirm now?
So till now we couldn't see any sharing. We will check it, sir. Arunima.
Hello.
Hello, sir.
Screen is there visible?
No, sir, not yet.
Not yet.
No, sir.
I'm sharing it now. Now it's not
Sir,
visible.
are you using your cell phone or you are using
No,
laptop,
laptop
sir?
only. Laptop only.
Laptop. Sir, I'll give you the instruction. According to that, you can follow, sir. It may be visible. 1 second, sir.
Ah.
It's visible there.
Just a minute. Optimize for monitor and text.
So at the bottom, you can see three icons. One will be for mute and unmute. One is for video. Another one will be hidden. So you have to click it over there. Sir, it is visible now.
Oh. Is it visible? Hello. I'm audible.
Are audible and it is coming and then it is disappearing. So I think there is some option which is been to be clicked. So after sharing, is it you are minimizing it or it is being shared? No.
Now it's visible.
Earlier one time it PPT slide came and then it is
Now
coming
it is
like
visible.
you are sharing.
Now
Yes,
it's
sir. Now
visible.
it is visible. Yeah.
Okay, I'm audible, no?
Participants can or not?
Yes,
Hello?
madam. It is visible
Yes.
in my system, Metropolitan Stock Exchange.
Now it's visible, no? Then madam is still not visible.
In my system, it's showing.
It's not visible for me.
Any other participants can respond whether you people are able to see the screen.
It's not visible for me.
Okay, sir. Then we will start now.
Yeah. I'm audible, right? I'm audible.
Yeah.
Yes, sir.
Yes, sir. We
Yeah.
can hear you and we can see your screen as well.
Very good. Yeah. Shall we start?
Yes, sir. We will be starting.
Any introduction need, or I can go ahead?
Yes, sir. There is a panel here. They will introduce and then you can start, sir. Just for 2
Yeah,
minutes, we will introduce you. Then
Yeah, yeah. Please,
Yeah.
please.
Shall we start?
Good morning to one and all. Warm welcome to the technical session 4 of 2-day national seminar on Indian stock market after COVID-19, organized by Department of Commerce, Central University of Tamil Nadu. I am Vidula from Department of Commerce. It's my pleasure to introduce Mr. B.M. Khaja Mohiddin, sir, who is the Assistant Vice President of Metropolitan Stock Exchange of India Limited. He has previously worked in First Electronic Nationwide Stock Exchange (OTC) Exchange of India. He is obtained certificate on various modules in National Institute of Securities Market, and he worked in various departments like inspection for stock brokers and listed companies, membership, compliance, investor grievances, arbitration, regulatory compliance, investor service center in MSE currently. So we hope you all are going to build a new knowledge by investing your valuable time in attending this session. Once again, I welcome you, sir. Now this session is over to you. Thank you.
Thank you. Very nice introduction. Thank you very much. First of all, I would like to thank Dr. Velmurugan. Even I did one program even earlier also for this Central University. Actually, this is very crucial time, we can say. Earlier, the crucial time was COVID-19, and for last 2 years, there was distance maintaining and not meeting anyone and wearing of mask and no crowd, no assemble. All these things was happened. And during that time also, we have conducted the program through the webinar online program we have conducted for so many colleges and so many universities all over India. And this is a wonderful session. And Mr. Dr. Velmurugan told me that capital market after COVID-19. See, stock market after COVID-19, what is the situations? And you will have to give the speech, lecture about the Indian stock market after COVID-19. The topic is a wonderful topic which is required at this juncture. I once again thank the Dr. Velmurugan and faculties, Dean of Central University and other management team for giving us the opportunity to have this wonderful program. And in fact, we are planning to have a physical program. We already started this financial year. We are going to the respective location and conducting the program. Let's we start the session. First of all, before going to the what is happened after COVID-19, but we should know what has happened before COVID-19, what was the situation during COVID-19, and what was the initiative as done by the Government of India RBI during the COVID-19, and now what is the conditions. Then only you will come to know that the correlations between the earlier situation and the current situations. So in 2020, before COVID session starts, the February budget, that time they given us so many tax benefits and the fund allotment for the infrastructure developments and tax benefit to the taxpayers and cash saving schemes they have introduced lot, and relaxation on dividend distribution tax for companies and fund allotments for agriculture, rural and irrigation developments. And the at that time the Sensex was about 40,000 and Nifty was around 11,100 at that time. Because the market was good and the market reports was said at that time it is going to be improved a lot and expected to touch around 46 to 48,000 in another 2-3 months. That means in before June 2020 we will touch like that. But immediately in the month of March, you can see that the situation was drastically gone down and it was totally affected Indian economy, and not only Indian economy, also the international, all countries economy and members of Indian industry also. And the this is collapse also. It's not slow collapse, it is something, it's very fast. You know that everywhere the drastic every day the points down was around 1000, 1500, 1700 like that in Sensex. And then you can see there's a tremendous uncertainty at that time. See, even the not only India, global economy, even FPI is withdrawing the money. So many things was happened at that time, and confusion and fears in the investors' mind whether we can keep it or we can continue with this or we can withdraw whatever the investment we have done. Whether recover period is we don't know. Whether we can continue or not. All this confusion was there among the investors, and everyone don't know the situations when it will recover, what the government is going to take action on this, the stabilization will be there or not. All these things, the confusion, so many questions was raised, and international business also collapsed, and FI is selling pressures, FPI is selling pressures, they are pulling out their money because not only in India, all countries, this is the situation. They don't want to keep the money or they wanted to invest some other industries like that they thought. And one of the major thing is even the fear in the all industries. No IPOs came out during the year 2020. Everyone got fear. That was the situation during the COVID. At that time, you know, the Sensex in I said 40,000 mark in February. You know that in February 24, March 24, the drastic deduction and depreciation happened in the Sensex, and it went down to the level of 25,600 from 42,000. It went up to 42,000 and it came down to 25,600. Then, based on the various initiatives by the Government of India, RBI and other industries developments and the policy changes, then it was slowly recovered in March 2021, came to the level of 49,500 from 25,600. And then in March 2022, another 1 year, it came to the level of 58,500. People got a confidence on the market, and even the international market slowly recovered. Even other markets supported. FAS started inducing the fund in the market, and then it is slowly recovered. Even it went up to the level of 62,000 mark. In May again, this year 2022, you know that it came down to 55,500. We discuss later in our slide why this has happened. Then what was the action taken by the people who are all the regulatory bodies in India? RBI announced so many policy changes and benefits. RBI has initiated policy changes during the and reduced the repo rate also at that time, and the special liquidity facility for mutual funds. It's around 50,000 crores they have inducted in the market. Then RBI provided 50,000 crores to the SIDBI for liquidity support to MSME companies, small, actually micro, small, medium enterprises. So that company has to come back. That company has to revive, so that the RBI has provided 15,000 crores. And then World Bank and Government of India signs 750 million agreement for MSC Emergency Response Program for increasing the flow of finance in the hands of MSME. The government has taken a much concentration on the MSME revival that has been initiated. Then the capital market review, what was happened? The government of India announced 20 lakh crores relief package in 5 tranches. Actually, slowly they have released the fund to the industries, to the various corporates, and then they have started reviewing it. And then major concentration on MSC and clarified in definition of MSC also. Who is MSC? Then the definition has been given. Accordingly, they can apply for loan, and then it has been reviewed. Then RBI loan facility has implemented, and export and import based on those things. The export and imports normalized gradually, and then the BSC. What was happened slowly? The BSC turnover also based on these type of the revival package was announced by the government, announced by the RBI, and then the market was slowly recovered, and then it has been even the turnover. You can see that from 6.6 lakh of crores in 2019-20 now increased to the level of that is 13.38 lakh crores in 21-22. The volume has been increased. People got a confidence. They've invested more money. You know that it is 63% jump from 2020 in opening of demat account. So many demat account has been opened. They wanted to buy because the good shares also came down during the COVID. Even the good reports before the period of COVID, there was a good report was there. Even that time also, people wanted to invest in good shares, and then they can retain it for some time. They have a confidence because of the so many revival package was announced. So it will come back to the normal situation so that they can get a gain on that. Then started slowly in 2021, IPO was introduced. So many IPOs came, nearly 40-45 IPOs came out in 2021 in first and second quarters. And then 4 lakh demat account. In the month of the financial year, you see that it was per month, it opened was 4 lakh demat account opened during the year 2020. Then that has been increased in 2021. 20 lakh demat account has been opened. Demat account what? It is the keeping of your shares in the dematerialized mode, and you are doing the trading, buying and selling of the shares. You will have to move the shares from this demat account. That is, it is maintaining in the electronic mode. When you are purchasing it, you will get the shares in the electronic mode to your demat account. If you are selling it, you will have to move it from your account to the other's account. That was happened. See, the gradual improvement was what was happened. 4 lakh share per month, 4 lakh demat account in 2020 increased 20 lakh demat account open per month in 2021, and 29 lakh demat account open in November 2021. That 2021 20 lakh was in April 2021. After that, it went up to the level of 29 lakh demat account, and then volume also increased because of the so many people have opened. Why suddenly this has happened during that time? Based on the so many revival package, all these things, the market was stabilized. And but one thing, what happened during the COVID period, so many people lost their jobs, the business gone, and the money requirement at that time was more, and they lost the job. They're thinking of investing somewhere. They are thinking of getting some opportunity to get the money. Then they thought of which is the right place is going to the market, share market, and we will watch it, and then we can invest it, and then we can get the returns. That they have spent the money they spent the money, they invested their money, they spent the time and involved in this market, and then they got a good returns on this. And then currently what is happening? There's so many things was happened after COVID was recovered. There was so many improvement was there. Even during the COVID, the loss of business and the usage of machineries in the factories was only 10%. So many placement layoff was happened. So many companies were closed. Companies are winding up because of the issues, and then transportation got stuck. So many issues was happened. Everything was recovered because of so many packages announced. So many initiative was taken by the RBI, SEBI also, Anna. They've given so many revival initiative for compliance. They says that okay, we'll give you a time. Slowly you can submit the report. Even they given a time for even they given an opportunity for conducting the AGMs, everything in online. And so many benefits they are given to the corporates, they were given to the stockbrokers, they are given to the stock exchanges. All these things make the market at least somewhere, even the international market also recovered slowly. But one thing you should take a note on this, comparatively other market, like other international market, we got affected much because our market is a bigger market. But comparatively with the other market, we have recovered faster. That the initiative was taken by the regulatory bodies. And then at present, what happened? Suddenly, this financial year, we got so many issues because of the Russian war, Russia and Ukraine war. That got affected because of that oil. Everything is gone up, and then weak global market cues everywhere, not only here. Because of when the two countries is fighting and two countries is there is a war in the international situation, definitely it will affect the market. In any market it will affect, but ours, the FPI's investment is more in our industry, in our stock market, so it get affected. And then country's current account difference, that is 18%, 3 years high in 2022 financial year. And then FPI's selling pressures, that is happened. And then even latest wholesale price index also they shown comparatively the April and May it went up, and that is the bad news for even Indian market. So these are all rupee depreciated to 78. You know that is the bad situation is in the countries it's happening it. And then COVID case fear again, it's increasing. We got a news even not only here, China, Japan, everywhere. They slowly again it's coming back. So everyone fear that again we are going to see the pandemic situation. So they are having some fear in this mind. They are making the investment slow, and even the FPI is pulling out the money because of this war and inflation in India. That everyone reading in the papers. That is a situation. This is all temporary situation, I can say. Some of the points we can consider, because now it is all are negative, so it's getting affect. So 58,000 say we are now from Sensex 58,000 to 52,000 we are now. Even the situation is I can say currently it is not a good situation. There might be a correction till December 3rd. We can expect more corrections, and also if the market Sensex is breaking 50,000, there might be a chances. If it is breaking 50,000, then it may go down to the level of 46,000 mark. That was the market news. It is actually we are getting a market news from various sources. They are telling that, but SEBI, RBI, and the government is taking considering the current situation, and they are taking it a much initiatives on this. Accordingly, I think they are taking based on their initiatives. the market will get again some level, it will come back to the level of 57,000 mark very shortly. But I'm telling all the, since you are the students or you are the faculties, whoever it is, you should know about the market, how it's going to react on various factors. This is what I said is the current situation. But factors are so many things. Even the respective company financial situation, you can say that the international issues, and you can say the business development in the respective market and benefits to the respective industries and changes in the government policies. So many things are there. All these things definitely will consider, it will react, the market will react each and every point based on that particular industry. That's what we always inform the investors, stating that you people have to understand the market, which segment is comfortable to you, you invest in that. And also, not only investing it, you have to monitor it. That is very important. You do that, we are telling is. So now you see that whenever you are going for the investment plan, that you should understand about the what is your plan. First of all, whether you are planning for the long term or short term, you are planning for the which product, whether you are going for the any insurance product or deposits, FD or RD like that, or you are going to invest in the mutual funds, or you are going to invest in the various products available in these industries like debentures, bonds. So many products are available. Shares, derivatives. Derivatives, if you are seeing it, equity derivatives is there, currency derivatives is there, debt securities is there, derivatives. So many derivatives are there. But when you are doing or when you are investing is any of this segment, then you must understand that there is a risk is there in this. Always in this market, risk and reward is attached. Don't know it is attached. Risk can be avoided by systematic investment and by selecting the period of investment when you require. Based on that, when you want the returns, it might be the short term and long term basis, and you have to plan accordingly. You have to design. You have to design the product, which product you wanted to invest in based on your wealth. See, people doing the mistake here only. When people are having a income, you should know that what is our income, what is our expenses, and what we can save. In savings, it can be a save or it can be investments. The money, whatever balance lying with us, that is the strategy which is using by Indian investors. Income minus expenses equal to savings. That is the investment, whatever they are doing it. But international, income minus savings equal to expenses. Whatever the balance is there, in that way their expenses, they are making it within that limit. That is the practice of that is the difference of the international investor and Indian investor. So you must be very, since it is the hard-earned money, you must be very carefully designed. It should come from the energy and ideas. You should read the paper, you should analyze, because financial literacy is very important. You should have the knowledge about what you are going to invest, because it is not for the temporary investment, it is for the long lasting investment, and you are going to get your return. Sometime it is after 10 years, 20 years, sometime it is less than 20 years. That you have to plan it accordingly. So decisions, the decision is come from your level, because some people may talk about so many things. They may recommend, sir, you can invest in this. This may be triple in 2-3 years, like that and all. No, you'll have to check it. 2-3 days they can say sometimes, but you'll have to see that whether it is realistic or not. As I said, whatever the investments, housing, children education, retirement, insurance, savings, deposits, RD, whatever it is. Then you have to design whether you wanted to short term or long. When you required a returns, when you wanted a money back, that you say. Short term means it is up to 1 year. The short term plan you can invest in, short term scheme you can use. As a student, you people can invest in a mutual funds, even minimum of 500 per month. You can select here whatever the schemes available. Even you can discuss with the asset management companies that they are maintaining your fund. You need not worry. Also, if you have a fear on the market, you can go through the mutual funds. The mutual funds is the excellent product. They are mobilizing a fund, asset management companies, and they are doing it. One thing you have to keep it in mind: whenever you are going with anybody, it should be registered with SEBI, should be a registered body, even it is a stockbroker or it is a mutual fund or any financial institution. You must be very careful, because then only in future, if you are facing it any disputes, any issues you are facing it, you can come through the exchange, or you can go through this scores to resolve your whatever the discrepancies you are facing it. That you can. Then, as I said, what are the factors? First is financial status. What is the amount you are having it? That you have to see that. Don't take a amount as a loan and investing it. Whatever the exact balance you are having it, that on a regular basis you invest it. Comfort zone. Select the comfort zone. Which zone you are comfort zone, in the sense, you know, I don't want to take a risk. I'll put it in deposits, RD or FD, even a lesser interest, no problem. You can go with that. But stock market, if you are taking a high risk, high returns you will get. If you are taking a low risk, you will get the low returns. That is the concept. So risk is always there. With in the capital market, guarantee we cannot give. In the stock market, we cannot give any guarantee. Risk is there, but return is very high. That risk you will have to take it. And as I said, mix of investments. Mix of investments means, because some people doing a mistake is one industries directly. There is a 12 industries in the stock market. There is a, you can see that automobiles, financial companies, real estate, oil sectors, telecommunications, so many automobiles. So you can decide accordingly which industry, banking industries, so many industries are there, which industries you are comfort, and accordingly you can divide your investments in various industries, so that if any one industry get affected, you are losing something, then another industries may gain, another industries will support. So your investment should be mixed, diversified, and carefully you have to have the, whenever you are doing the heavy investments in one segment, that is always dangerous, because no one knows. Even you are doing a small, I am telling that normal investment itself, you will have to divide and put it. When you are doing a higher investment, highest investment in one segment, one industry, it is always very dangerous, and it is not advisable. Then the emergency fund. See, sometimes you are invested, good returns you are getting it. Suddenly you may face some emergency fund you require. Some we cannot justify, some medical or some education or some marriages, some money you can you require sometimes. So you have to keep some fund for the emergency. So then even people breaking the good returns, even funds, good returns, investments also, because of the emergency requirements. And in credit card, that is the biggest thing you have to avoid. Whenever you are having a balance of something, first you close that, because of the highest interest. You don't know how much you are paying every month. You are having a 1 lakh something you need to pay, but you are paying 10,000, 15,000, 10,000 like that for 10 months. Then every month you are paying highest interest, and then rebalancing of portfolios. You have to watch it regularly. Some people doing mistake is They are buying investments, whatever the shares they are buying it, and for long run basis and putting it in the cupboards. They don't know what is the status of that. Suddenly one fine day they are taking it and checking it in the market. It went down like anything. We are seeing so many cases. It went to, they invested 1 lakh. Suddenly after 1 year, 1.5 year, it came down to the level of 30,000, 40,000. Such a situation, market may react anything, anytime. We don't know. Even it might be based on the say like even if US federal announcement of even highest interest they are going to be, and even very nearly also they are going to increase. Accordingly, other countries also react. So this may come some corrections, and already this Russia Ukraine still it is not stopped. We can't say that whether market will be normalized immediate level. No, it will take some time. That is also issue is there, and because of that inflation is happening. It wholesale price index is going up, WPI, all issues we are facing it. So must be very careful while investing it and watch regularly and avoid the fraud. Many people, many, they are facing so many issues, and because of the WhatsApp, because of the SMS, that public domain, so many information you are getting it. Even they don't know to whom they are sending the messages also. They are making a call, speaking to the students also. And sir, you are investing in the market, so there is some good return is there. Can I advise like that? You can invest in this, all these things. But sometimes they are not a earning member. Small kid, because of these people having a mobile during this COVID time for online classes, they are sending message continuously. Even they don't know whom they are sending it. But some people now immediately react. They will jump into that. Okay, we'll put it 50,000. Put 50,000 today. In next 1 week, it will be double. You will get such a message. Don't react immediately. Analyze it. Whether possibilities is there or not. You have to check it very carefully. Then you have to react accordingly. Then you can see that before investing, you should raise some questions on you. And you have to see that when we will have to invest, where to invest, how to invest, and then time to invest. Time is very important. Many people says that we have lost the opportunity during that COVID. It came down to 26,000 mark. Even 60% of the value of the shares came down for the good companies, but they have not invested. They have not invested in the industries, and it was even within a year, 2021, after August, it came to the level of 49,000 something, the mark, 52,000 it was reached, and then it came to the normal level prices, even it went above the prices also. They lost the opportunity. That is very important. Then select the best investments. Excess money, which I said already, the same things you have to consider. Select the best industry. Consider all aspects. See, when you are next slide, I will tell that when you are selecting a shares, you have to consider all information. What is the 52 weeks high and low? That you will have to see whether these shares, these companies declared a dividend earlier, and any bonus announcement was there, that you will have to see, because all these investment, all these informations are available in the SEBI website. It is all available in the exchange website. It's all available in their company websites. That is all these three are reliable websites. You can go through the all information, even the share wise, company wise, when they have declared the dividend, how much they have declared, bonuses were split, what was happened, what is their annual financial report, what is their net worth now, what is their financial soundness, everything you can see. That is very important. And the business promotional activities, what they are doing it. Even the management changes. And who is the management? Who is backing the company? what is their international projects, whether they are getting a good projects and all, accordingly they are going to get the business. And then how the volume, liquidity, how it's happening in the industries, in the trading, how the liquidity is there, frequently trading, increasing, decreasing of the share value, everything you have to consider. Even if you are not getting the shares in the IPO, no problem. The secondary market is there, because after IPO allotment, everything, the companies are immediately listing with the nationwide stock exchanges. Any stock exchange, they are listing it, and it is coming for the trading subsequently. Even in that time, you can buy one share. You can buy one share in the secondary market, but in the IPO, they say minimum 5, minimum 10 you have to buy. Even sometimes you may get, if you are applying for 10 minimum, you may get only 5 allotment. But in the secondary market, you can buy one share or you can buy 1 lakh share, whatever it is. You can buy 1 lakh share also. That you can do. You can watch the price movements, because now it is everything in online. Everything is in online. You can register yourself even through online. Whatever the complaints requirement, checking your photos, approval, everything through online, the stockbrokers are doing. Only you have to select whether those brokers are registered brokers or not. That is very important. And 52 weeks, high and low, you will have to check it. The same period last year, what was happened? Whether it went up, came down. When you are buying, what is the rate? Whether this is the best rate or it went down last month something, or it will come back again that level, or it will go up further. All this analysis you will have to do. That is called financial literacy. That financial literacy, you should have it. That is what we are educating the students, colleges, factories peoples, and then corporate peoples, bank officials, everyone. We are doing a program. This 75th independence celebration, we are doing it all over India. Even frankly speaking, we are doing it for the school students, 10, 11, 12. When before they are entering into the colleges, they should aware of that, what is capital market. That we are doing it now. And then social media platforms, that this is the very important things. Social media platform, that issue is everywhere, it is there. See, the people who are putting it, even some people says that this is for their personal benefit. They are giving it so many wrong information. People are entering into that, and then they are losing the money. This social media, you must be very, very careful on that. And then you can see that script prices, volume moves, everything is enough. You people are the people telling that this will go up. Are you ready for investing? This is another a month's time. It will be double, triple, so many things. And even some people who are not registered as a stockbroker, they are giving a benefits. This charges is not there, that charges is not there. We are zero brokerage. It's so many things. But you must be very careful. You have to select your brokers based on their network. They are their network and net worth. Both is you have to check it. You can go to their website. You can find out those things. And then their service, how they are doing his service, and whether it is the infrastructure is well developed one or not. That you will have to consider it, and carefully you will have to invest in this market. And then I can say that the NISM, since you are the students, you people knows about the market. There is a in the stock market, 3 stock exchanges are there: National Stock Exchange, Bombay Stock Exchange, and Metropolitan Stock Exchange. These 3 stock exchanges are there. You can do trading in any of the stock exchange through stockbroker, and the depositories, National Security Depository Limited, that is NSDL, and CDSL is Central Security Depository Limited. These both the depositories are there. We are opening of account through your stockbroker with any of these depository, you can open it. and the clearing corporation who is giving the guarantee for your trades, because everyone should have some guarantee. What is the guarantee you are having it? You can say that, you can ask me, sir, ready, okay, I have some money, I wanted to invest. Now, as I said, the market is even the coming down, even you have to consider that it went up to 62 mark, 62,000 mark. Now it is 52,000 mark. 10,000 is the difference. It came down to the level of 52,000. So even people, how they are doing it, they are doing it average. 52,000 is something, some they will buy in 50 May something they will buy if it is going down, or 52 and 52, 53, 54, like that, some investment they will do it, they will do the trades, and then they will buy some shares, then they will make it average. So that is the opportunity also available in this, that is there. And the clearing corporations, which is the institution, every exchange is having it, they are giving a guarantee for your trade and settlement. Trading means whatever the trades you are doing through the registered stockbroker, that trade is confirmed one, that trade is guaranteed one. And then if you are buying, you will get the shares. If you are selling, you will get the money. That guarantee is given by the clearing corporation of the exchanges. So that guarantee is there. So all these things, now you are aware of that, what was the earlier situation of COVID-19 and what was the developments was happened, improvement was happened. There's a initiative was done by the regulatory bodies, and what was the loan was given to the industries, and how they recovered and revived, and then they maintained, stabilized the market, and then continues for a long time because of the international issues, because of the war issues. This current situation is reflecting like this in India, and FES selling pressure is there. So it will recover, definitely it will recover, but the investments, you have to carefully invest in this market, expected some corrections also, so accordingly invest carefully. And these students, now I am talking for the students particularly regarding their career opportunity. What is the opportunity available in these industries? You people should know. There is so many opportunities available in these industries. People who are clearing their graduation, who are coming out for the PGs, MBA, and CAs, and company secretaries. There is a n number of industries in n number of institutions in these industries. They are called a market intermediaries, infrastructure intermediaries, MIIS. That is market infrastructure intermediaries. Who are all that? The regulatory bodies, SEBI is there, stock exchanges is there, depositories, as I said, NSDL, CDSL is there, financial institution is there, asset management company is there who is maintaining the mutual funds, then stock brokers is there. These are all market intermediaries, infrastructure intermediaries. And then opportunities, you are having these stockbroker companies, you are having an opportunity. In SEBI, you are having an opportunity. In depositories, you are having an opportunity. In stock exchange, you are having opportunities. And what is the role in stockbrokers? Stockbrokers, front office, back office, this what is this? Securities operation and risk management, depository operation, accounts, administration, relationship manager. So many opportunities are available at present. Now the market has little bit recovered. People are started activating, and then stockbrokers also started improving their volumes. All these things are happened once you came out. But for that, whether your graduation or your post graduation is enough, no. The market is expecting some additional certification, which is the National Institute of Securities Market, which is the subsidiary company of SEBI. They are the regulator because SEBI has made it mandatory for stockbroker staff officials should have this NISM certification, which they are operating for the respective departments. If you are a compliance officer, you want to become a compliance officer, there is a module, there is a separate certification for that. If you want to become a back office staff, there is a security operation risk a separate module is there. If you want to be a business development guy, that relationship manager, there is a separate module for that. Nearly 27 modules available in the NISM. That is, they are doing it online, offline. Now offline, you can apply through online, through their website. There is a workbook available. You can read that. You can understand that. Even you people required for doing the certification course, based on the that module basis, we can have a separate physical program. In that basis, even I am ready to take it, or any other topic you wanted also, we can do it. But there is an n number of opportunities available in this industry now, and these companies are there. These infrastructure intermediaries are there. They are giving, even SEBI is recruiting, even the exchanges. You can go to the exchange website carrier. There is a n number of opportunities available. So I recommend you people should do this certification also. These, you select it, you can select the line, which line is your interest. In that line you can go, and you can come out with the qualified level with the certification, and definitely you will get the career opportunity. And also, even many people are becoming stockbrokers. Many people are having their own stockbroking firms, because they are having a knowledge, because while reading, while studying itself, they have started investing, so that they have a knowledge on that. So I recommend once again the students, people can complete this certification course, which is helpful. Even you can go to our website. There is a lot of presentation available. You can go to the exchange website. You can read it. In that, so many information. You can go to the SEBI website. You can go to the stockbrokers website. You can go to the depositories website. How depository is operating, how stock exchanges are operating. What is stock exchange is providing? They are providing the trading platform. They are providing the opportunities to the listed companies to list them. They are providing the opportunity to create a liquidity for the shares. They are registering the stockbrokers. They are registering the investor through the stockbrokers. They are giving an opportunity for savings and investments. So the stock exchange is doing the major role. So you people should learn about the market intermediaries, should learn about the intermediaries, and then they learn about these regulatory bodies, and then accordingly you come out with the excellent knowledge to get the career opportunities in these industries. So once again, I'm thanking, and also once again giving a caution for the students as well as for the faculties. Whenever you are doing investment, you have to carefully invest it, because of your hard-earned money should not go waste, and then you have to invest properly. You will get a more returns on this. Risk is there. You can avoid the risk with the systematic investments, and then it should help you and your family members and your future generation. Once again, I thank the management, Central University Dean, former Dean, Dr. This one, Well Murugan, and the other faculties and the professors, everyone, particularly students. See, this is the second time I'm taking it. I thought of planning to come physically to do some programs on various other topics. How to become a client with the stockbrokers, and what is the role of relationship managers, and what is the risk management in the industries, that is in stockbroking. And then in that way, topic wise, I thought of that, and we are doing so many. Even taken for SRM, and they were taken for Austin Institute of Management. So many colleges, so many corporate banking, Canara Bank, IOB, and Access Bank. Even latest finance minister's participation in 75th independence celebration for the country. And in that way, I was one of the speaker in Chennai, and it was excellent program. Like that, we are doing creating more awareness to the students and students for in the school students, college students also. So once again, I thank for giving me an opportunity. Such a wonderful program we had. Thank you very much.
Thank you, sir. Now the session is open to Q&A. Dear participant, anyone have any doubt? Please raise it.
You can ask any questions, anything which is relevant to market, current situation, why they lost earlier situations, and something about stockbrokers, whatever you are facing any issues, if you are already investors, like that.
Sir,
Yeah,
shall we ask a question?
exactly. See, it's a welcome. Please.
Sir, after MCom, what type of courses shall I take?
See, as I said, first of all, you go through the NISM. That website is available. I have shown that there is a website ID also is there. Go into that. Even they are doing the separate 3 months course, 5 months course, 1 year course like that also. You can do that on a specialized areas that you can do, or you can go with the stock exchange like NSC, BSc. They are also having a separate courses. You can do that also. That will be helpful for coming into these industries for the relevant. You have to have ideas, goal, which line you wanted to go. You want to come out for the front side, like a guiding to the investor for how to fill the KYC, how to open an account. All this the front office role. If you wanted to middle office role, like after giving a application, verification of application, opening of demat account, opening of trading account, that you are interested in the stockbroker office. I am telling in the back office. Otherwise, your back office, you are interested in that line, in relevant module available in the NISM. So accordingly, you can select, you can get a good knowledge on that.
Thank you, sir.
Yeah, welcome. Any other? Even faculties can raise if they are already investing in this industry. You have some doubts. You wanted to get some information on that or something. The broker is telling, but it is because people even sometimes submitting the non-mandatory documents. Mandatory, non-mandatory is there while opening their account for trading. They don't know which is the mandatory, which is non-mandatory. You people can ask anything about this industry. Yeah, please, good afternoon, sir.
Sir, actually, I had a doubt that
Yeah.
so during these type of like situations, can we go through the short position strategy, sir?
Short
position strategy.
short position strategy you can go
Yeah.
when it's further going down, which
Yes,
we are
sir. Yeah.
expecting the market. If the expecting market is going down, we are having a confidence. The situation,
Yeah.
everything's indicating that it will go further down only. Then you
Yeah.
can think of is going short. But
Yes.
going short is there is some risk in that, because we don't know when it will react in the reverse level. That is there. But based on the condition, considering a situation, and you have to continuously watch the market. Accordingly, you can do the short position and then you can recover it.
Okay, sir. Okay, fine.
That's one of the strategy it is.
Yes, sir. Yes.
That is what. Based on the situation, the strategies you can consider like that.
Okay.
But it
So,
is
but
not only always in a continuous basis. You cannot consider like that. There is a more risk on that. Suddenly it's fall now.
yeah,
It fall like anything.
okay,
That's what the risk is there. You must have a sufficient fund to pacify or support the margin in that
yes,
situation.
yeah, yeah,
Yes. Something you
yes, sir.
want to
Thank
ask?
you, sir. Thank
Yeah.
you.
Thank you. Welcome.
Sir, good afternoon, sir.
Good afternoon.
Sir, thank you so much for the wonderful presentation. So you have nicely portrayed the current position in a lucid manner, sir. First of all, thank you so much for that, sir. And this query is regarding, so we have seen 2008-9 crisis. And after that, we have seen the bounce back in the Indian stock market. Similarly, this COVID also had a major impact, and now we are seeing the bounce back also. And by your presentation, I could see that the recovery this market. But in spite of that, we have seen that drastic growth here, and you have seen that there's so much of investors who is having the interest in investing in the stock market. In spite of that, we could see still the share prices are going down. Maybe the Nifty and the Sensex has been bounced back, and we can see the growth in the indices. But coming to the share prices level,
Yeah.
what
Yeah.
is that? What's your opinion on that, sir? Making
See, as
investment
I
on the
said,
particular stock?
as I said that when we are talking about the Sensex or Nifty, it is overall market. It is when you are talking about the Nifty index, it is the 50 stocks. Nifty 50 is
Yeah, that is
consist
what.
of
There is a
the
growth in the Nifty
growth.
as well as Sensex.
It
But
will
still,
balance.
and when we go for the individual shares, but we couldn't see
Ah,
the such type of profit or the bounce back that we have made investment before 2 years or 3 years or three.
exactly.
So we are
You
not
let
able to recoup it.
No, 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 no. As I said in my presentation also, you are considering not only global, you have to consider on the micro level also. Say like respective company shares, respective industries. That both you will have to consider. That's because some of the A sector is there. That is always it will come down also. It will go. But some of the B sector or Z category, so many things are there in the BSc. See, you see that it's a particularly on the performance of the respective company and their financial information, as I said, because it will react based on their performance that continue the particular industries and particular companies' performance. Sometimes it will react like that. See, when the market is growing, sometimes all sector will grow. When sometimes market is growing, some sector will not grow. Some is
True.
it's a react for some of the information. Say like real estate, they said interest is going up. Interest is going up. The loan people who are going to take, they will think of it whether we will take it or not. If they are not taking a loan, then whether they are ready to buy or not is the question. Then the industry will get affected. That is for the real estate car. If it is the oil prices increase, in that way only we'll have to consider. Related to the oil sectors, it will benefit. Might be the prices go up, it will go down. But suddenly war, suddenly all these things are happening. It will also react in this. Sometimes gold price go up. So now it is the gold price is coming down. So people of the FPAs, they are always consider, they will rotate their investments. Some industry is going down, they will shift the focus. If they are shifting it, if it is the stock market, they will shift it in the gold market. Then they will shift it into the oil sectors. Like that it's, and also the cycle every you said 2008 and after that 2018 because this 10-year cycles is there because people analyze like that only what was in the 10 years back a decade back that always they will think of it, they will analyze those datas, current datas, because fundamentals is also very important. Technical analysis one side and another side is fundamentals, but we are not well versed. But those who are giving, some of the reliance industries, reliable industries are giving, that we will have to see that, analyze that, what their focus, what is their future focus on the particular industry, particular shares. So we are stock exchange. We cannot indicate that the particular shares will go up like that. We cannot indicate the particular industry go up. So overall, we can say that you have to carefully.
So you
look
mean
into all
rather
that.
than looking at the whole picture, we are supposed to look at the micro level aspects also.
Absolutely.
Okay, okay. Got it, sir. Got it, sir. Thank you so much, sir.
Yeah. Any other?
Sir, I have a question, sir.
Excellent, please.
Can you give any advice for the research project related to stock market, like from where we can refer the data like that?
See, research on research is so many things are that. Say, like, you can select some of the derivatives product, how it is working now, what is the risk related to it? Because I can say that many people, many many investors who are seeing that the people who are wrong guided, so they are telling that you will get the returns very high like that and all, but at the same time risk also very high. So people not having the much awareness on the trading in the derivatives products. That because derivatives product is first to the hedgers who are doing a business, who wanted to pay a amount in the international this one cash like that, dollars or a franc, whatever it is. So in that payment, based on that, people hedging to avoid the losses, risk, they are reducing it through the hedges. That is first preference to them only. But now the people, even the small investors involving on this, but if they are not having a much margin, they may get affected more. They are losing it. If I am talking about the research basis, I feel that you at these junctures we'll have to recur to see the research on the risk management. That is the very important things. How the risk, in what level it is going, because sometimes suddenly imposing of additional margin and extraordinary margins. Why these are imposing? What is the situation? What type of situation the market is facing it? Because of that, these in which condition all these situations are arising it. All these research basis may we will have to go for particularly on the derivatives products. If you are know something on the derivatives products, then you can involve on that. But little bit very tough subject, I can say. But it is the people every time they are asking about that question only. Can you suggest something by trading in the derivatives? And also one more thing, some of the market which is not recognized by the cryptocurrency, I can say, which is not recognized by the government of India, not by the regulatory bodies. People are investing like anything. It is in the air. There is no complaints at all. But how the people are having a confidence to invest on that? The risk about that, we can think of research on that. Risk. We can talk about risk as well as benefit. We can think of it like that. Some of the product you have to select and you have to research on that basis. Clarified? Anything you need?
Thank you, sir.
Good. Any other? Hello? Anyone? Any questions? Because this is the COVID situation, we cannot say that the condition is over, or it will not come back, or the market will be stabilized continuously like that, long lasting. No assurance for that. That's what I said. Market will not give any guarantee for the continuance of the stability. It may react for any reason. Any reason. It may react earlier and all. If it is go down, the whole day it go down only, and then it will close in the down trend. But now it is not like that. Morning session is up 500 points, afternoon session 250 points down. The situation is like this market. You must be very careful. Anything else? Good. People are asking good questions. Some of the very good questions that is relevant to the market. Anybody? Hello? Can you respond? Hello? 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 Anyone can respond?
Yes, sir. We can hear you, sir.
Yeah, please. No response. So I thought that no one is there.
Thank you so much, sir.
Thank you.
Your understanding and compassion for topic are really admirable. Thank you for making the session more informative. Dear participants, paper presentation will commence by 2:30 to 4. Kindly join any one of the panel as a witness for paper presentation. Attendance will be considered. So, we break for lunch. Thank you.
Thank you. Thank you very much for the opportunities given.
Thank
you. Thank you.
Dear participants, feedback will be circulated during the paper presentation. I request all the participants to log in by Bluetooth. I repeat, for the paper presentation panel, we will be serving the feedback link for morning session. So please log in afternoon by 2. Thank you.
वाईफाई होना है तो वाईफाई यूज कराएगा ऊपर।
Right now I'm so busy. Hello. அதெல்லாம் வந்து கடனுக்குலாம் போட மாட்டான். இல்ல அதெல்லாம் சொல்ல முடியாது, கடனுக்குலாம் போட மாட்டான். ஏன்னா இது நம்ம சொல்றது கிடையாது, மேனேஜர் சொல்றது, அந்த கடனுக்குலாம் போட மாட்டான். அந்த ஓனம் தான். ஆமா. Hello, sir. Sir? Hello, sir. Hello, sir. Am I Yeah. Yeah, yeah. Now you can come.
Hello, sir. Is it audible?
Yes, yes, audible.
It is.
Good afternoon to one and all present here. I am Neema, first year MPhil student, Central University of Tamil Nadu. Now let us move on the paper presentations of panel A. It is chaired by Dr. S. Ramesh Kumar, Assistant Professor, Department of Commerce, Central University of Tamil Nadu. Dr. S. Ramesh Kumar holds master degrees in commerce, specialized in banking and finance. Sir, he is Master of Philosophy, PhD holders having a teaching experience 40 plus years. Sir is a holder of Bharat Jodi Award, IIFS New Delhi. Sir has published 30 research papers and 27 papers presented 9 international and 18 national seminars. And there is one book publication also. Presently, Sir serving as Assistant Professor in Department of Commerce, Central University of Tamil Nadu. Now, I want to welcome Dr. Ramesh Kumar Sir to chair this section. Welcome, sir.
Yeah, thank you. Thank you very much. Shall I start?
Yes, sir.
Yeah. So very good afternoon to all of you. Now we are in the second day of the ICSSR sponsored a two-day national conference on Indian stock market after COVID-19. So this conference aims at providing the platform for the different stakeholders, namely the researchers, academicians, policymakers, student friends, industry experts, and other related and relevant stakeholders to share their views and have a fruitful deliberations in this 2 days conference. And the paper writers and the presenters are making their presentation on the various related various topics relating to the main theme of this conference on Indian stock market after COVID-19. So we had different technical sessions yesterday, and the paper presenters have presented their papers on the various topics, and they came with some interesting findings also. So we had many technical sessions, and the very good papers were presented, and moreover, I would be happy to mention that some papers came with some interesting findings, and some researchers have offered the fruitful suggestions also based on the findings of their papers. And today is the second day, and we are in the post lunch session. So here, before starting the presentation, I would like to extend my sincere gratitude 2 days program for giving me this wonderful opportunity to share this post-lunch session on the second day of the national conference sponsored by the ICSSR. So as mentioned by the organizer, the amount of time allotted for this particular session is 1.5 hours, 90 minutes. 5 paper presenters are going to present their papers at this particular session, and the time I will be allotting 10 minutes for each presenter for presenting their paper. I humbly request the paper presenters to finish their complete presentation within 10 minutes. Then only we can go for another. We can have a discussion for another 5 to 6 minutes. So you need not mention the, don't go for reading the context of contents of the paper. Yesterday also one or two scholars or students, they have simply read their papers. So don't go for that, and be brief about the statement of the problem of your paper. After mentioning the statement of your problem, straight away you can go to the objectives of your paper. Then you can explain the methodology which is followed in your paper, and after that you can go for presenting the findings of your paper. So as far as this session is concerned, the paper presenters are going to have their presentation on the different interesting topics relating to the Indian stock market. The first one, Mohammed Jisham and Dr. S. Vanida, they are going to present their papers on the topic retail investors in the capital market after the post-COVID times, the case of discount brokerages in India. And second paper is on that will be presented by Fasabullah Shivaya. It is on the topic, the unprecedented collision of the COVID-19 on the Indian stock market, a sectoral analysis on the Indian financial sector services. And Mr. Shivaya will be presenting this paper. And the third paper, the authors of the third paper is Arya Kumar and Dr. Svetlana Hota. Their topic is pandemic diseases are infectious to the stock market performances globally. So they are, when compared to the other topics of this particular session, this topic is completely different because their focus is on the global stock market. And the fourth paper will be on the performance of the IPOs in the Indian stock market before and after COVID-19 pandemic. So this paper will be focusing on the IPOs, took place IPOs in the Indian stock market during the post and pre and post COVID-19 pandemic. And the final paper that will be presented by Dr. P. Challachami and N.S. Bala Nimoshini Subraja on the topic, a study on factors influencing oil and gas industry stock price, volatility and its impact on the economic development. All topics of this particular session are very interesting. I hope that the presenters will come up with some interesting findings and the fruitful suggestions for the overall development of the Indian stock market. So let me invite Mr. Mohammed Nizam and Dr. S. Vanida to present their paper on the topic retail investors in Indian capital markets after the post-COVID times in case of discount brokerages in India. Please.
Thank you, sir. Thank you for inviting me. Sir, shall I start?
Yes, please. You can start your presentation.
Okay, myself, Muhammad Jisham. I'm a research scholar from the Department of Commerce and Finance Studies, Bharatdasan University. First, I would like to extend my gratitude to Central University, Tamil Nadu for giving me an opportunity for presenting my paper on the ICSR National Seminar. Today, I will be present my paper on the topic retail investors in capital market after the post-COVID times, the case of discount brokerage in India. I will present my paper with my research guide, Dr. Vanida.
Mr. Mohammed Jisam.
Yes, sir.
Yeah, you can show your face. Please unmute the video.
Okay. Just a second, sir. Sir, I have some technical problem.
No issue. Please go ahead.
Okay, sir. I'm sorry for that technical issue. As far as my topic is considered, before I will come to the background of this study, we know that in 2019, December, the COVID is happened in China, and it was reported in India, firstly in Kerala on the month of March, After that incident, when COVID is reported in India, our stock market was in a crash. Before on the February time, our NSE index was on the point of about 12,000. And when the COVID is reported in India, suddenly within a week it came around 4,000 point down and reached 8,000. So a huge loss for investors. And for almost 8 months, our market was in downside. But after immediately come to 2020 November, our market is recovered. It again came to its pre-COVID level. It was a very short period. Our market recovered all its losses. So I come to my point. In this time, I am getting 2 points. So the one side is about individual investors, another side about discount brokers in India. In this time, we have seen the influx of retail investors to the market, and their participation was also increased. Before this COVID time, the participation of individual investors in our security market were less than 2.5%. And after this pandemic time and during this lockdown time, more people came to share market and then started to invest. And I believe that, and from my study, I believe that discount brokers have some role to play here. Then, what are discount brokerages? Well, maybe Zerodha, Stocks Grow, all you might have heard about these brokerage firms. The presence of Zerodha or Upstocks, it was
Sir,
even.
Mr. Muhammad, Mr.
Yes,
Muhammad.
sir. Yes, sir.
Is it a brokerage, discount brokerage, or discount brokerage firms?
Sir, discount brokerages.
Okay.
So it was here, their presence was there from after 2010, but it was not familiar. But during the COVID time, they have attracted a lot of investors to the market, and they have got more and more clients. And so most of the individual investors, they have chosen this Zerodha like discount brokerage to enter or to open demat accounts to the market. And these are some example of discount brokers that are providing service in India. Zerodha, 5paisa, Grow, Upstocks, Angel Broking. They are now Angel One. And these are the papers some I reviewed. The objective of this paper is to analyze the role of discount brokers in the security market and also understand their changing roles after the pandemic. This data were collected from secondary sources, mainly from NSE and HDFC Security Industrial Research. Percentage analysis are used for this study. And come to discussion point. As far as from this table, this graph shows that in 2014, only 23 million, that is 2.3 people have demat accounts in India. And during the period of COVID, our demat account opening was increased. And in the year 20 July and between 21st financial year, there was almost 35% increases. From 2014, when we reached 2001 July, almost 65 million people, means 6.5 crore people have demat accounts in India. It's reached 8 crore now. And coming to trading using smartphone, mainly this discount brokerages, they are given their services through a digital investment platform. People they download the Zerodha app or Grow app from Google Pay or Android, and they will install. They will use their smartphone for trading. And in the NSE, almost the equity share, 23% of transaction happening through your smartphone, and in future and option share, 11% of the total volume of trade happen through smartphones, which are in their discount brokerage have some major role to play. In active client market share of top brokers in India, I have taken top 5 brokers in India, and their 3 brokers are from discount brokerages. From this graph, we can say that the Zerodha, the first thing which is exhibited in blue color, their client share is increasing, and also the next billion technology, which is Grow, and Angel Broking, which is Angel One now, and RKSV, which is stocks now. Their all shares are increasing in number of total active client market. But look at the case of HDFC Securities and ICICI Securities, which are bank-based traditional brokerages. Their numbers of clients are decreasing over the time, but the discount brokerage, they are attracting more and more clients. Then discount broker, retail brokerage revenue. The first thing is that discount brokerage, they will charge a maximum 20 rupees for a trading volume. But in case of traditional brokerages, they might have charged 1% or 0.75% of the total transaction value they will charge. So we know that in an Indian capital market like Indian capital market, if we trade something a share, we will get a maximum, we can say 4 or 5%, and we have to give less than 1% or nearly 1% to brokerage. So it is a loss for investors. But in case of discount brokerages, they are charged one transaction 20 rupees maximum. So it is very beneficial for investors. So they are getting brokerage revenue only. Sorry? In financial year 19, their brokerage revenue was 10 billion. And when it comes to financial year 21, their revenue was 31 billion. And according to HDFC Security, they forecast the brokerage revenue of this discount brokerages to 85 billion in the year of financial year 25. Then these are the present situation of total broking revenue in the brokerage industry. The light green is exhibited discount brokerages. In the financial year 19, their volume, their share in the total revenue across the broker industry was 13%. And in financial year 20, during the COVID time, it increased to 20%. And after COVID time, 27%. Then in financial year 25, it was forecast to increase by 37%. In the same time, the traditional brokerages, their share in total revenue is decreasing also. Then this is an interesting fact that before our capital market we take, it is the ground for playing between cities. Most of the traditional brokerages or financial advisors, they are situated in big cities like we can say Delhi, Mumbai, Pune or Bangalore, which are metropolitan cities. But most of our population, they are situated in villages or tier 2 or tier 3 cities, where the coverage of brokerage industry was very less. When people think about their investment, they don't have a choice. They have to go physically, they have to submit all the KYC, they have to pay high amount of transaction cost and everything. But after this discount brokerage came, it became very familiar. We know that they are providing their services through digital investment platform, which is a mobile application or online trading. So every people who have a mobile phone or who have a computer, they can open demat account by online. It is absolutely free now, and they can give transaction, provide. They can share, sell, buy or sell shares within a less amount of brokerage in the brokerage. Also demat accounting process, then KYC process, everything is, the process volume is reduced. So Barpeta like cities, there's a city in Assam where they have only 3.6 lakhs people. If we take Delhi, they have maybe 10 million people. Mumbai, they have around 10 million people. But this Barpeta city, they came in first 10 in number of total investors came to market. All it is facilitated by this kind of brokerage industry. And come to conclusion, slowly discount brokers are chipping away at the market share of traditional full service brokers as traders migrate to their lower cost model. The another thing is that we have a demographic dividend now. Most of our population are youngsters, they are tech savvy people, they are more interested to adopt technology, and this digital investment platform, that is discount brokerage, they are based on technology based model. So youngsters, among youngsters, they are more adopting this brokerage for their investment, and also it give a wonderful minimal interface, minimal better customer interface for the investors. So it's very easy, and they also charge low cost, that is very useful for a middle income investor or below middle income investor. And also this brokers may charge less, but they also offer their clients minimum services, and they are not suggesting any share or everything. They are giving all the tools, they are giving a chance for investing. Then also their share also increasing in the market, and traditional brokerage firm, their share also decreasing with this increase in the discount brokerage shares. And they this projected that many institutional investors, they project that the share of discount brokerage in the industry will again continue to increase. And the another thing is that after demonetization, people have more tendency to use technology, and digitalization happen everywhere. In banking sector, more people come to then open account. We have almost 1 billion bank account now, and the next phase it may be happen in the capital market. So more people come to capital market. So we will have more demat account. We will have more retail investors and discount brokerage firm. Discount brokerages, they will facilitate this revolution in the Indian capital market, maybe in the next decade or after that decade. So these are the references. Thank you.
Thank you, Mr. Mohammed Nishan, for focusing on both the retail investors and the brokerages in the Indian stock market. So I have some questions.
Okay, sir.
Regarding your presentation. So if you look at the number of people, those who are investing in the Indian stock market, particularly the retail investors.
Yes, sir.
People, those who are investing in the Indian stock market has drastically increased after the outbreak of COVID-19.
Yes.
So did you find any specific reason for that?
The first thing, sir, is that the technology was available, and after the geo-led revolution in the market, where data is very cheaper. Even before the COVID time, the discount brokerage presence was there, but people were not able to use because they have to pay for data also. But before this COVID, geo was happened in India, and data charge is very less. So as it influenced all the digital market or digital industry, digital business model, it also affected this discount brokerage because they are selling or they are giving opportunity by digital means. So people are now able to use all this digital platform.
Okay. So another question is that you have mentioned about the different types of the brokerages.
Yes, sir.
Which brokerage is having the highest number of clients?
Sir, at present, Zerodha have.
Zerodha.
Yes.
So what about the commissions charged by the brokerages for their transactions?
Sir, this discount broker.
Particularly for this buying and selling transactions.
Sir, Sir, for buying a share, you don't have to pay any amount. It's absolutely free in discount brokerage. But if you want to sell, you have to pay amount maximum 20 rupees per transaction.
No. Which brokerage is charging the more amount of charges or commission?
Sir, I'm not sure about, sir. I know about this discount brokerage only, sir.
Is there any differences in the service charges collected by the brokerages?
Yeah, there is a difference, sir. If I compare with traditional brokerage, there is a huge difference. But if I compare it with a discount brokerage, there is no much significant difference because all the discount brokerage, they are charging a similar amount.
So which one is better in terms of brokerage service charges?
So now Zerodha they are leading. They have more investors, and their interface is much very easier for the investors. They have more tools, digital tools now. So people more people they are adopting Zerodha. So I think at presently with the technology backend, which technology is best, the technology used by Zerodha is best now.
Okay, thank you very much.
Thank you, sir.
Yes, sir. So audience are encouraged to ask questions. If you have any doubts or queries, please post it. So we encourage the audience and the participants to raise the questions, and you can seek the clarifications from the paper presenters. Well, thank you. So next I invite Mr. Pasukulla Sivaya for presenting his paper on the topic, the unprecedented collision of COVID-19 on the Indian stock market, a sectoral analysis on the Indian financial services sector, financial services stocks. Please, Sivaya.
Yes, thank you, sir. Sir, are you able to see my presentation PPT?
Yes,
is it visible?
It is visible. Yeah.
But I need to give full screen that.
It is visible, you can continue, Shivaya.
Okay. Sir, actually, my webcam also not working. Actually, I need to update my system. That's why I'm also not no, opening my webcam.
Okay, please go ahead.
Yeah. Yes. Honorable Vice Chancellor, Central University of Tamil Nadu, respected Head of the Department of Commerce, and Conference Coordinator Dr. Velmurugan sir, panel experts, and all participants, good afternoon to one and all. My name is Shivaya, Research Scholar, Department of Commerce, Central University of Tamil Nadu. So I'm going to present research paper titled The Unprecedented Collision of COVID-19 on Indian Stock Market, a sectoral analysis on Indian financial services stocks. This research paper worked in collaboration with Dr. Sugandhya ma'am. Before starting my presentation, I do want to share a quote. So that is, recessions and stock market drops are both common occurrences. You won't do well in the market if you don't grasp what's going to happen. So this is the quote given by American investor mutual fund manager Peter Lynch. So this quote relates to the subject of my presentation. That's why I have given this. So now I will move to my presentation. So these are the outline and introduction that what I'm going to discuss in my presentation. Introduction, literature review, objectives, methodology, data analysis and interpretation, limitations, implications of the study, conclusion, scope for future research and references. So I'm moving to introduction part. In the global economy, financial...
You can change the slide.
Yeah, I'm changing, sir. Is it not changing?
But it is not, here it is not changing.
Now?
Yes, yes.
Yeah, if I'm maximizing my window, I think it's not changing. I will keep like this only.
Yeah.
Yes. In the global economy, financial system plays a critical role. So instance, an unexpected incident that recently destroyed the global economy and had a negative impact on the Indian and global stock market. So that unexpected alignment COVID-19 has scattered across the globe. And if you see, on January 30th, 2020, the first case of coronavirus infection was reported in India. So the study was conducted, examined the impact of COVID-19 on Indian financial services. So once if you see what are the stocks will comes under and the financial services that we can see, commercial banks, private sector banks, housing finance organizations, non-banking financial institutions, insurance companies, mutual funds, and other financial institutions. So the research mainly selected the stocks based on market capitalization. That's why I have given you here a background of the study regarding market capitalization. So we know very well about this capitalization. So here we can divided companies in three categories. Those are companies with a market value of less than 5,000 that we can classify as a small cap, and then companies the capitalization between 5,000 and 20 crore are classified as medium cap or mid cap, you can call it as. And companies with a market capitalization of rupees 20,000 crore more, those we can call it as are considered as large cap. So I'm moving to literature review. Here I have collected 22 literature reviews for my study.
Shivaya, you can just mention the research gap identified.
Yes, sir.
Yeah.
So here the studies they were discussed revealed that everyday containment new cases had a significant impact on stock returns in general as well across the nations. These are the recent studies. Why? Because the pandemic has started in 2019, and after that only 2020 and 2021 this research was taken place in this domain. So that's why here also we can see Jan, he examined in a tourism, entertainment and technology and gold industries, he was analyzed. And the international, this study, this is an is international study. So in this study, he concluded that the time being keeping short positions is a successful strategy until stronger signs of market stabilization emerge. So these are the some of the literature reviews I have collected. So I'm moving to objectives of the study. So here I have mentioned two objectives in my study. So those are, first one is to identify the comparison of pre and post pandemic assessment in Indian financial services stocks. And the second one is to understand the current status or position of those selected financial services stocks. And I have given significance why I have chosen the Indian financial services. Financial services help to promote both domestic and international trade, which takes place very important part in that. And it also plays an essential part in the circulation of money flow in the economy. That's why I have taken Indian financial services stocks. So here I have given research hypothesis. So there is a significant variation in the value of Indian financial services stocks during the period of pre and post COVID-19, or before and after COVID-19. So this is the data and methodology. So considering the purpose of the study, the current study used a descriptive research design. So it was chosen to carry out quantitative research based on secondary data obtained from Money Control and the NSE website. The selected stocks were obtained from NSE top 10 constituents stocks by market capitalization in Indian financial services. Actually, there are 20 stocks are there in Indian financial services. But in this study, I have taken based on market capitalization, I have taken 10 stocks. So the data used in the analysis represents the Indian stock market sectoral performance over pre and post period of COVID-19. The analysis is based on the daily closing prices mean average of stocks of constituent banks, insurance companies, development banks, and non-banking financial institutions, and no other sectors I have taken. And the study used to pair t-test and to compare the pre and post pandemic volatility, and the Gauch asymmetry model in theoretical I have used to employ to understand the current status and current position of the selected shares, and SPSS EVs used to data analysis I have used. Yes, this is the table of paired sample test. So here you can see I have marked it in red color. So it is most important table in this approach. It provides results of paired t-test that evaluated the statistically significance of the mean difference. Here you can see mean difference as well as standard deviation among the differences, and the standard error of the differences, as well as boundaries of the confidence interval around the difference. Also, this table also provides t-value, degrees of freedom, as well p-value of the significance level. So perhaps to decide whether to accept or reject the null hypothesis. To prove the hypothesis or statement of the study, so we can see here three different ways from this table. So as per the study, the critical value is 1.960. So in this, we can see the t-value is greater than the critical value. Here we can observe t-values all are greater than the critical value, means it is 1.960, except Kotak Mahindra Bank and Bajaj Finance. You can see all other stocks are t-value is greater than the critical value except Kotak Mahindra and Bajaj Finance. So it means there is no significant variation in the value of Kotak Mahindra Bank and Bajaj Finance stocks during the period of pre and post COVID-19. So now second one, we can see the p-value is lesser than 0.05. No, here we can see the significance except Kotak Mahindra Bank and Bajaj Finance. So all stocks are showing the p-value of the calculated value is less than 0.05. And in third also we can see here is the upper and lower values you can observe. So 95% confidence interval of the differences shows the same side. Here you can see the same signs, positive and positive aspects. So whereas if you see Kotak Mahindra Bank and Bajaj Finance, you can see here reverse signs. So all these, so therefore, by all these three judgments, the study concludes that COVID-19 has an unprecedented collision on Indian financial services stock during the COVID-19 pandemic. And there is a substantial evidence that there is a significant variation in the value of Indian financial services stocks before and after the COVID-19 pandemic at the 5% significance level. So here you can see some graphs. So these graphs displays selected share values and current status and performance in the form of graphical line bar. So you can see that the graph is currently trending upward. The graph shows mainly two dimensions: the influence of chosen stocks and Indian financial services indices, as well as the how these Indian financial services indices impact the NSE index. So all equities fell during the pandemic. So, however, according to the study, the influence of COVID-19 on Indian stock market was short term. So here you can observe all the shares are after COVID-19 cases. So it suddenly came down. So initial, then afterward, the shares were going slowly upward. So these graphs analyzed through the GARC asymmetric model in theoretical. Generally, GARC model was divided into two types: asymmetric and symmetric models. So these asymmetric model explains that so bad news tends to increase the volatility more than the good news. So here we can see the how these COVID-19 bad news, how it impacted on these indices as well as the stocks. It drastically came down suddenly. So it shows that the volatility of shares and indices are asymmetric during the pandemic period as well. So, but in a long term, the share curves are showing the upward trend. So the graph illustrates that COVID-19 has an unbalanced effect over a shorter time span. So the curve indicates that when stock price drops due to adverse news, volatility rises even more. So this is the another stock prices graphs. So here you can see. So all suddenly it came down because of this COVID-19 bad news. So here I have mentioned some of the limitations in my study. The current study focused only on National Stock Exchange in India. I didn't cover BSE. And this study also focuses on pre and post pandemic stock performance as well as current position of the stocks rather than risk management and strategies and other aspects. The study selected the top 10 stocks based on market capitalization from NSE Financial Services. So, whereas other stocks listed on other major stock exchanges were not examined for the current analysis. So, implications of the study. So, during any scenario, share values and returns fall, but the study outcomes assist as comprehend share movements before and after any circumstances. So here the research assists to policymakers in implementing unique tactics in pandemic situations if it happens in a future. So how we need to overcome, and these practices provide long-term benefits to the both business as well as the stakeholders. So future study into assessing COVID-19's influence on the Indian stock market as well as anticipating the future outbreaks as well as now better position to pursue stakeholders shareholders value in the future. These are some implications I have mentioned in my presentation, my study. So this is the conclusion. I found that the study mainly found that volatility of shares and indices are asymmetric during the pandemic period, but in long term the share curves are showing the upward trend. This has an unbalanced effect over a short period of span time. And the study also suggested that when things are going down, it's the perfect time to deploy capital as well.
Over.
Existing research could be extended to focus on the impact of global market volatility on the Indian stock market, long-term financial performance, and the growth of Indian financial services stocks by managing their risk and use of various strategies. These are the scope for future studies from my study. So these are some references I have mentioned here. Thank you.
Thank you, Mr. Shivaya.
Yes, sir.
Shivaya, regarding your topic, you say that your paper analyzes makes an attempt for sectoral analysis.
Yes, sir.
But you have considered only the financial services sector.
Yes, sir. Sir, in sector means,
sectoral,
yeah, there are.
yeah,
Yes, sir.
sectoral analysis means you have to focus on the different sectors of the economy,
Okay.
for which you have to consider the shares of the different companies belonging to different sectors.
Yeah, but I have taken
Yeah.
the name sector. In that sector also I have focused on especially Indian financial services stocks only.
Okay, so you
But I don't know
considered
whether.
you have taken into consideration only the financial services sector for analysis of your
Yes.
paper.
Yes, sir. Yes, sir.
So regarding the sample, can you elaborate the sample institutions considered for your study? You have considered 10 different institutions.
Yes, sir. Yes, sir.
But in your at the time of presenting the sampling design of a study, you have clearly mentioned about the basis for the selection of the sample units for your study.
Yes, sir. Based on market capitalization, I have taken 10 stocks.
You have selected 10 different financial services companies.
Yes, sir.
Of this around of these six belong to the banking institutions. Am I right or not?
Yes, sir. Actually, those selected stocks are HDFC Bank Limited, ICICI,
Yeah, totally
Housing
you have
Development.
selected 10 different institutions. Of these 10,
Yes.
6 are from banking industry.
Yes, sir. Yeah.
Yeah, how many of them are from insurance industry and how many of them from what is that, non-banking finance companies?
From insurance, there are two banks are there, sir. HDFC Life Insurance Company Limited and SBI Life Insurance Company Limited. So as well, other financial institutions, Bajaj Finance and Bajaj Finserv are there, and Housing Development Finance Corporation also there.
Yeah. What about the bankers? Whether all the 6 banks are coming into the large cap?
Yes, sir. All 6 banks comes under large cap only. HDFC Bank Limited, ICICI Bank, Kotak Mahindra Bank, Axis Bank, State Bank of India. So all these comes under large cap only, sir.
Then what about the NBFCs?
Sir?
Whether they comes under the medium cap or mid cap or large cap?
No, sir. All selected companies will comes under large cap only, sir.
Oh, you consider only the large cap only?
Yeah, sir. Based on market capitalization, I have taken the data.
Yeah. Based on the market capitalization, you have selected the sample units, and
Yes, sir.
all the sample units belonging to the
large
cap
cap.
only.
Yes, sir. Yes, sir.
Okay. So, what is your findings regarding the performance during the pre and post pandemic period?
So mine is just I was observed that my study is focused on pre and post effect of COVID-19 on Indian financial services. So here in graphs I have showed that.
My question is, Sivaya, did you find any significant difference in the performance of the stocks of the selected companies during the pre and post pandemic period?
Yes, yes, sir. Pre and post stocks there were a difference. That's why I have rejected the null hypothesis.
No, what is your finding in this regard?
So my findings are that there is a difference, significant variation in the value of Indian financial services stocks during the period of pre and post COVID-19. Also, I have given some suggestions, and my findings here I have mentioned that the shares curves shows that when a stock price drops due to bad news, the volatility rises even more comparatively good news. So as well, I have suggested that when things are going down, it's the perfect time to deploy even capital sometimes. So we can use short positions and those things.
So if you look at the market capitalization of the Indian banking companies,
yes, sir.
SBI tops the list. So SBI is at the top in terms of the market capitalization. I am talking about the scheduled commercial banks which are functioning in India. Okay.
Yes, sir. But once if we get data from this Indian financial services, so based on market capitalization, this HDFC Bank is the first one.
Okay.
Yes, sir.
Yeah. Based on the market capitalization, HDFC is the first one.
Yeah.
What about SBI? Is there any specific reason for omitting SBI from your consideration?
I didn't get, sir.
No. What is the position of SBI in terms of market capitalization?
Yeah, it was market capitalized based on weightage. It was 6.92, sir. Actually, HDFC Bank was 22.04%. So, and once you see, SBI was 6.92% only.
Okay. So I was talking about the balance sheet size of SBI, not the market capitalization.
Yes.
Okay. Thank you, Shivaya. Thank you, Mr. Shivaya.
Thank you, sir.
So next I invite Dr. Arya Kumar and Dr. Svetalina Kota for presenting their paper on the topic pandemic diseases or infectious to the stock market performances globally. Please. Dr. Arya Kumar, are you available online? Dr. Svetalina? Can you hear me? Dr. Arya Kumar?
Sir, it's not available.
Are you available?
Sir, still getting 91%, sir.
Dr. Arya Kumar, please. I think that the authors of this paper are not available online. So we can move on to the next paper. Now I invite Mr. Vishnu Prasad and Dr. Anil Kumar to present their paper on the topic performance of IPOs in Indian stock market before and after COVID-19 pandemic. Please. Mr. Vishnu Kumar?
Yes, sir.
Yeah, please start your presentation.
Sir, my PPT is visible now?
Yes.
Okay, sir. The performance of myself, Vishnu Prasad from Calicut University. My companion is Dr. Anil Kumar, Principal Paisharaja College, Pulpalli, Wayanad. My topic is the performance of IPOs in Indian stock market before and after COVID-19 pandemic. Introduction. Indian economy witnessed tremendous changes and renovations in their policies and programs in the 1980 and 1990. In the year 1980, there occurred an improvement of the GDP growth rate from an average of 2.9% in 1970 to 5.6% in 1980 due to a liberalization of industry and trade borrowings from abroad and raising government expenditure at home. In 1990, India implemented the new economic policies to accelerate the economic development of the country. The existence of an efficient and well-developed capital market is an important part of any emerging economy. The capital market is expected to accelerate the economic development and construct a path to sustainable growth by promoting channelization of savings to productive investment. The development of capital market requiring improvement in quality, transparency.
Mr. Vishnu?
Yes.
You are simply reading your paper. Reading is not permitted.
Okay, sir.
Don't read it completely.
Okay, sir.
Yes.
So the impact of COVID-19, the paper in my paper is an attempt to study the sector-wise performance of IPOs during the COVID-19 and the research gap I identified. The number of studies were conducted in different parts of the world about the IPOs and its performance. So the present study is an attempt to identify there is any difference in Indian stock market, the sector-wise performance and the year-wise performance. The objectives of this study to analyze the sector-wise performance of IPOs in Indian stock market during the pandemic period. To evaluate, second one, evaluate the performance of IPOs before and after the COVID-19. The research methodology. The research is a quantitative study based on secondary data collected from website of NSE's BSE website of various stock brokers and various other websites. So in the period of I considered for my study in the period of 2018 to 2021. In that period, there is 121 IPOs were conducted. So my sample, my total population for the study is 121 IPOs that happened in the period of 2018 to 2021. I use to analyze the data. I used the Wells test, ANOVA, and post-hoc test used to identify the differences. Result and discussions. First, I goes to the number of IPOs during this period. In the year 2018, there is happened 24 IPOs, and 2019 is and 17 IPOs are happened in the stock market. And in 2020, there is 16 IPOs, and 2021 is there is an 66 IPOs are conducted in this during this period. And the sector-wise comparison, I differentiated the sector on the basis of industry, financial, healthcare, material, IT, and other sectors. In these, in the period 2018, there is happened 6 IPOs in the industry sector and 6 in financial sectors and so on. And in the year 2021, there is happened a very huge IPOs or large IPOs are conducted during this period. And in that year, total 10 IPOs is conducted in industry and 8 in financial and 9 in healthcare and 11 in material and 5 in IT and 23 IPOs in other sector. And I goes to the performance evaluation. In the year 2018, there is 24 IPOs are conducted. In that, 12 IPOs are ended with a gain and 11 IPOs are ended with loss, and 1 IPO is listed on the same price. In the period 2019, a total of 70% of IPOs are listed in a gain, and 29% of IPOs are listed on loss in the exchange. A total of 17 IPOs are conducted during this year. In the year 2020, 75% of IPOs are listed on the gain, and 25% of IPOs are listed on the loss into the exchange. In the year 2021, 71% of IPOs are listed on gain, and 28.8% of IPOs are listed on loss. And data analysis. I set a hypothesis here. There is no significant difference among various sectors with respect to average gain or loss during this period. And in the table, we can analyze that the mean score of average gain or loss given on the table 8 indicate that the other sectors such as communication, service, consumer staples, utility shows highest means, followed by material, IT, and industrial sector. The real estate sector shows the lowest mean score during this period. And test of homogeneity in the significant value in this is a 0.035. The result of test of homogeneity of variance given in the table 9 shows that a p-value of 0.035. Hence, there is no homogeneity of variance. So I go for the Welch test used, and the result is given below. In this, the significant value is 0.55, so 0.522. In the table, the value of Welch test is above 0.5, hence null hypothesis is accepted. So there is no significant difference among various sectors with respect to average gain or loss of IPO's performance during this COVID-19 period. And second hypothesis, there is no significant difference among different years and IPO performance during this period. In this data, we can see that in the year, the significant value is 0.042. The highest. The analysis showed that there is a significant difference in the performance of IPOs in different years in the significant value of 0.042. It is less than 0.05. So to identify which year shows the difference in the performance of researcher go for the post hoc test. In the post hoc test, I identified that when we compared with 2018 and 2020, there is show the difference of performance. In the when we compare with 2018 to 2020, the performance is very less. So in the conclusion, an analysis of performance of IPOs during this pandemic period indicate that before the pandemic, major IPOs are conducted in industry and financial sector. A few IPOs happened in healthcare sector, but during the COVID-19 and after the COVID-19, there is a spike in healthcare sector of IPOs. During the COVID-19 period, the market corrected in a very big way. After that, market recovered quickly. The record of different sources state that after the pandemic, number of demat account holders are increased. It is found that there is in the analysis part, the study mainly focused on two objectives. First one, to analyze the sector-wise performance of IPOs in the Indian stock market during the pandemic period, and second, evaluate the performance of IPOs before and after the COVID-19. Through this study, the result shows that there is no sector-wise difference in the performance of companies from the 2018 to 2021. All the sectors performed in the same direction. When we focus on the second objective, it shows that significant contribution. When we compare the year 2018 and 2020, there is a difference in performance. In 2020, the performance of IPOs is significantly less compared to 2018. But in the year 2021, the IPO back to momentum and performed positively. This is all about my presentation. Thank you, sir.
Yeah, thank you, Mr. Vishnu. Regarding the number of NPOs, particularly,
yes, sir.
Particularly during the post-pandemic period. So the number of IPOs under the healthcare sector is very low when compared to the other sectors. Did you find any valid reason for this?
Because we can see that after during the COVID period, when we look into the stock market or evaluate the performance stock market, we can see that after the pandemic situation or during the 2020 to 2022, there is a very huge hike in the performance of healthcare sector, especially the Lotus Lab and Dr. Reddy's, and that kind of stocks are performed very well during this period. So I think that the companies are focused on the IPOs are entering to the market during this period. They can get a better performance with their share, and they can acquire more market cap when they are attempting to enter in the market during this period. That's why more companies are coming to IPOs during this period.
Okay. So regarding the performance, your paper has mainly focused on the performance of IPOs during the pre and post pandemic period.
Yes, sir.
So you have considered only the profit and loss variable for analyzing the performance of the IPOs.
Yes, sir. Because IPO is mainly focused on these two things.
Apart from profit or loss, you would have considered some other factors also for analyzing the performance of the IPOs.
Yes, mainly I focus because
you may consider the number of volume of transactions in the trade volume.
Yes, sir. Because I am.
If you are planning to make it as into a publishable format, you can consider these sizes also. Because there may be a number of variables to be considered for analyzing the performance of the IPOs. But you have, considered only a single variable called profit and loss for analyzing the performance. So you may try to consider the other variables also.
Okay, sir. Okay, sir.
So why did you consider the study period that is from 2018 to 2021?
Because that's in 2018 is the period of we are in a stable position. There is no any other external factors like the COVID-19 or any pandemic situation in here. So in 2018, how the IPOs are performed is very important, because when we understand the performance of IPOs during this 2018 and 2019, we can know that in 2019 there is no any concerned about the COVID-19. In these 2 years, 2018 and 2019, there is no concern about the COVID-19. So these 2 years are I considered as an there is in a stable position. And after that, in 2021, 20 and 21 is the mainly we are concerned about the COVID-19 and these much issues. So that's why I consider 2018 and 2021.
Okay. So the last question is, can you name some of the companies which recently went for IPOs?
Sir, can you repeat again? I can't.
Can you name some of the companies which recently went for IPO?
As LIC is recently listed in the stock exchange, and either is the latest one that is introduced in the stock exchange. And in the COVID-19 period, there is a IT sector stock that like different sectors.
Thank you very much, Mr. Vishnu.
Okay, sir. Okay, sir.
So next I invite Dr. P. Sellaswamy and N.S. Bala Nimoshni Supraja.
Yes, sir.
For presenting their paper on the topic, a study on factors influencing oil and gas industry stock price, volatility, and its impact on economic development.
Yes, sir. Sir, is my PPT is visible?
Is visible. Your face is not visible.
Sir?
Your face is not visible. You can unmute your video also.
Sir, I'm not having a webcam, sir. Only presenting.
So the same problem is faced by all presenters.
Good afternoon to one and all present here. I am N.S. Bal Nimoshni Supraja, Department of Commerce, Bardiyar University, under the guidance of Dr. P. Challasamy, sir, Professor, School of Commerce, Bardiyar University, going to present the topic entitled A Study on Factors Influencing the Oil and Gas Industry Stock Price Volatility and its Impact on Economic Development. Introduction. Share market investment is one of the prominent options for making better investments for the investors since its initiation in India. This is one of the extensive course of action that generates sizable returns to traders and investors. Making considerable profit in the market is an unbreakable as well as robust.
Reading is not permitted. Don't read your paper.
Okay, sir.
Yes.
So many of the factors are influencing the stock market, that is supply and demand, company performance, and economic indicators such as GDP, inflation, foreign direct investment, and so on. So the study focuses on factors influencing the factors influencing the share price on oil and gas industry. Research issue. Stock market is an important part of Indian economy for many developed and developing countries. NSE is expected to play a major role in the global financial market, which helps in the attractive investment for many Indian and foreign investors. In recent times, many due to COVID-19 and many global cues has happened nowadays. So many of the investors are not aware about the stock market, and many of the factors also influencing more towards the oil and gas industries. So the studies aim to fill the gap between the significant impact to the stock price behavior, which affects the yields of the investors. So an individual who wants to earn superior return with a substantial amount of risk has to necessarily participate in equity market to get higher return. Based on the following research issue, objectives has been framed to demonstrate the relationship between the factors influencing the oil and gas industry stock price, to investigate the elements that influence the stock price and whether they have a substantial impact on the oil and gas industry share price. The research is purely based on secondary data, and the companies have been chosen based on market capitalization. The study period consists of 2 years, from 2020 to 2020, 2020. 2 years from 20 to 2022. Various statistical tools have been identified for the study. Multiple regression is used for estimating the impact of factors on share price fluctuations. Pairwise Granger causality test is for estimating the association between the factors influencing and the stock price fluctuation. The select companies are Indian Oil Corporation Limited, Oil India Limited, Hindustan Petroleum, ONGC, and Petronet. Data collection, analysis and interpretation. Due to this is a time series data, so I have identified. I have used augmented Dickey-Filler test for checking the normality. The oil and gas companies listed under the NSE, the result rejects the null hypothesis of unit root at levels for the Indian Oil Corporation, Hindustan Petroleum, ONGC, GAIL, IGL, and Bharat Petroleum. Hence, these companies are stationaries at level. And the results, the share price are significant at 5% level, indicating that there is a significant existence of unit for each of the share price at their level. Companies like Oil India, Petroleum,
You can show this slide.
Okay, sir. This is a co-integration test. That is for the relationship. So
We were not able to
oil
see
and
the results. Please change the slide.
1 second, sir. Now it's visible, sir.
Yes, please.
For the co-integration test, I have used Eagle Rancher co-integration. So the oil price on the oil and gas industry has a significant impact since the p-value is less than the significant value. Hence, the null hypothesis is rejected, and that there is a significant linear dependence between the inflation and oil price on oil and gas industry. This is a multiple regression analysis to find out the impact. It is referred from the table that R square value for Indian Oil, Oil India, Hindustan Petroleum, ONGC, Indra Prasad Gas, Petronet, GAIL, ICGC, Bharat Petroleum, and Gujarat Gas has a significant impact, and the percent has a significant impact. Since the p value is less than the significant value, it has a great impact on supply and demand, companies' performance, dividend, macroeconomic indicators, and so on.
Over.
1 second, sir. Suggestions of the study. Companies like Indian Oil, GAIL, ONGC, Hindustan Petroleum fall in demand and supply. This has to improve their growth by investing their capital, by reducing the debt dues, and sell their shares with low price to attain market with good performance. Factors like GDS, FII, and FDI, demand and supply, oil price, shows a significant relationship, and this variable bridges the growth by providing the employment options to increase the money flow, ultimately by enhancing the Indian economy as well as in investment progress. Investors are recommended to make their investments on companies like Indian Oil, Oil India, GAIL, Gujarat Gas, ONGC to get higher profit than their investment. Conclusion. The study concludes that oil and gas industry have contributed better outcome during the study period. The factors contributing for the growth of the market ensure to make investment on both short and long run with the high and low risk patterns along with high return norms. Hence, the study concluded that the results of variables like GDS, FII, FDI, demand and supply, oil price, company's performance, can cause its share price volatility, and thereby to make a better decision of stock market by ultimately enhancing the economic growth with stability as well as the investment progress. Thank you.
Okay, thank you. Ms. Nimoshini,
Sir?
I have two queries relating to the presentation. First one is that your topic is a study on factors influencing oil and gas industry stock price volatility and
Yes,
its
sir.
impact on the economic development.
Yes, sir.
So, how did you measure economic development in your paper?
So I have chosen the economic variables, macroeconomic indicators, sir, like GDP, supply and demand. Based on that price, I
GDP
have.
or GDS?
Sir?
GDP, have you considered GDP?
Yes, sir.
Okay.
So based on that, I have compared with the oil and gas industries company share price.
Okay. Can you elaborate on the sampling technique adopted in your study?
So sampling the technique is based on my own convenient. I have chosen the companies. Companies have been selected based on market capitalization, and the macroeconomic indicators also I have chosen based on my own convenience.
Okay. Regarding the market capitalization, how many companies you considered for your study?
Five, sir.
5. Can you name these 5 companies?
ONGC, GAIL, Indian Oil Corporation, Petronet, LNG, and some.
Okay. So which company tops the list in terms of market capitalization of these 5?
Sir?
Which company?
ONGC and IOCL, sir.
I don't know which one. Which one of these 2?
I think
ONGC or IOCL?
I think ONGC, sir.
ONGC. Okay. Okay. So what is its impact on the economic development?
Sir,
Whether it has created a favorable impact or unfavorable impact?
it creates a unfavorable impact, sir, because due to COVID-19, many of the petroleum and oil price has been increased, so it has shows a negative impact.
Okay, thank you very much.
Thank you, sir.
So next, I invite Dr. Bharat Kumar Meher to present his paper on the topic modeling asymmetric volatility of stock prices of the FMCG companies of India during the post-COVID-19 using T-Corp with high frequency data. Sir, please. Can you hear me, sir?
Yeah, I'm able to audio.
Please continue.
Let me show. Is my screen visible to everyone? Hello?
Yes.
Hello, sir. Is my screen is visible?
Yes.
Okay. Okay. Now you see, thanks a lot to the convener and as well as the coordinator who has given me the opportunity to share my thoughts on the how that the COVID-19 has actually impacted has actually created an impact on the stock prices of FMCG companies, and the research paper that I have actually chosen is that modeling asymmetric volatility of stock prices of FMCG companies of India during post COVID-19 using T-guards with high frequency data. Well, you see that when we talk about this COVID-19, you already know that it has actually affected economy, and even economy starts dwindling and tramples. And this is the reason for which that even the Indian financial market has also witnessing the a sharp volatility. Now, if you see that even that Indian financial market and the stock markets are affected, definitely the FMCG sectors, the stock FMCG sectors are also that there is no of that they are also being affected by this. But the thing is that during the pandemic, we all know that even so that the other commodities they are not at all in demand, but FMCG actually have a lot of demand. Do we see that there is a possibility FMCG business? There is a big opportunity for FMCG business to improve even the pandemic. Now you see that even after the pandemic, we can see that still prices are also and they are not at all fluctuating in a regular trend. There is a chance. Is my voice is audible? Audible?
Yeah.
Hello.
We are not able to hear you properly, sir.
Is my voice audible, sir?
Right now.
Hello.
Yes, please continue. Can you hear me?
Hello, sir. Is my voice is audible?
Some issue is there.
Now audible, sir.
Mr. Bharat Kumar. Hello, sir.
Hello.
Sir, we are not able to hear you. Dr. Bharat Kumar, can you hear me or not?
Am I audible, sir?
Yeah, now it is clear. Please continue. You are audible, sir. Please continue.
Hello. Hello.
Dr. Kumar,
Hello.
can you hear me?
Hello. Am I audible now, sir?
Yes, please.
Hello. Hi, Bharat. Wait.
Mrs. Gagana?
কি জানি yeah, sir. Hello.
Is it audible, sir?
Hello, sir.
Yes.
Hello, is it audible?
Audible, you are perfectly audible. Please continue your presentation.
Hello. Hello.
Sir, is it audible? No.
Arya Kumar and Dr. Arya Kumar is available?
Sir, am I audible now?
Yes.
Okay. Thank you. So sorry for this kind of inconveniences.
Sir, you are expected to finish the presentation within 6 to 7 minutes.
Yeah, sir.
Yeah, please.
I'm trying to share. Yeah. Now comes to the review of literature part. That even in my paper, I have also given a detailed review of literature. In that, some of the lacunas are actually there in the existing literature. That first one is that there is a lack of usage of high frequency data. In my paper, I have used actually hourly data, but in other papers, they are actually using the daily data. And that is what if I will go for high frequency data, minute volatility can also be determined. Apart from that, many of the papers, they are actually ignores the FMCG sector of India from investors' point of view. Okay, so after energy sector, I have also published 2 papers in that energy sector in Scopus. And so I have decided that what is the second most important sector in which on which that COVID-19 has actually created an impact, and that is the FMCG sector, and that is the reason that I have chosen this title. Now, so far as my objectives are concerned, my objective is to frame asymmetric price volatility models for FMCG companies, and the companies that I have chosen, it's actually under the Nifty 50 by using the hourly closing prices. And here also I want to capture the leverage effect of post-pandemic COVID-19 impact. And next is that I also want to go for to focus the volatility of those FMCG companies if my model is actually appropriate to focus those volatilities. So for forecasting this volatility, first of all, I have to check some hypothesis. Then only I can go for framing the model. The first hypothesis that I must say, the high frequency data that I have extracted, whether it's stationary or not. If it is not stationary, I have to make it stationary. So my null hypothesis is that the stationary data, that is hourly closing prices of 5 FMCG companies, are of stationary in nature. Next thing that I need to check is the arch effect. If I will go to use any kind of asymmetric volatility, in my paper, I have used only one volatility model, that is T-Garch model, which is also known as GJR Garch model. But apart from this model, other asymmetric volatility models are also there. For example, that is E-Garch model is also there. Okay. Next is that there is no leverage effect after framing first criteria. Then go
Sir, again, there are some
check the
issues at your end.
third criteria in which that I have checked
Dr. Kumar.
the I have to check whether is there any so
Mrs. Gagana is available or not? Mrs. Arunima? So Dr. Kumar.
effect is in many examples. FM, I have
No, we are not able to hear you, Dr. Kumar.
I'm able to hear it, sir. Tell me, sir.
We are not able to hear you. Please go to your conclusion part of your paper.
Methodology.
No. Straight away you can go to conclusion.
Okay, this one. This is the impact of positive shock, that is impact of good news. In that case, if B1 plus Y1 equal to impact of bad news, whereas B1 equal to good news, and ST is actually considered a variance or returns. Now for that, first of all, I have to convert all the data into stationary. After converting the data into stationary, now these are the data that I have converted. These are the 5 companies data that I have converted into stationary. Next is the results of heteroscedasticity set, which is actually known as the arch effect. Now this arch effect, if you say, then first of all consider the Britannia Industries. Here we can here you can see that these things, this is not less than 0.05. So this is the reason that we can say in Britannia Industries Limited there is no arch effect. So we should not frame Teague-Arch model for this company. Next is that the Hindustan Unilever. Here you can see that the significance is less than 0.05. It means that 0.02. So in that case, we can use the Teague-Arch model in Hindustan Unilever. Similarly, I have also checked for remaining 3 companies. One is for that ITC, where it is not significant. In Nestle, it is significant. And in case of this Tata Consumer, it is also not significant. So there are, out of 5 companies, only 2 companies are there which shows the significant arch effect. So we have to frame models only for these 2 companies. Now in that model formulation, that I have selected the 2 companies which have the arch effect. So the 2 companies were, one is the Hindustan Unilever and another one is the National India Limited. In case of that Hindustan Unilever, the impact of, if you want to check the impact of bad news, whether the COVID-19 news has created a significant impact on the stock prices of Hindustan Unilever in post-COVID era, then in that case we have to check these things. That is the residual, this one. Here you can see that the probability is less than 0.05. So we can say that in Hindustan Unilever, that even in that post-COVID era, there is an impact. Whereas if you will go through with this Nestle India Limited, in that case, the significant, it is not significant because it is then it's better to opt a model, or better to go for the consider of Hindustan Unilever. It means the T-Garch model or the GJR Garch model, it is much suitable only for this Hindustan Unilever. Next, coming to the conclusion, as you see that even though that many news are going on that after energy sector, FMCG sector is the most affected by COVID-19. But as you can see, whatever the analysis that I have done after the post-COVID, after the post-pandemic era, in that case, out of these 5 companies in Nifty 50, only one company, that is Hindustan Unilever, stock prices are actually the company which are actually being impacted by the COVID pandemic. Yes, you can go for the conclusion that the demand for the products of those Hindustan Unilever company, that can be more as compared to the other companies. So you can say that this is the reason for which. But there are some limitations of my study. The thing is that for extracting the high frequency data is actually a costly affair. So this is the reason that I have considered only Nifty 50.
out in which Nifty 50 I have considered only 5 companies. Yes, more extended analysis can also be done if I will take Nifty 100 or Nifty 200 or Nifty 500. So that more companies of FMCG sector can be considered and a depth analysis can also be made. Okay. Apart from that, the analysis that I have done, it can also be done with the other sectors. Say, for example, that some of the participants, they were actually going for the financial services sector. So the same analysis, that is same T-GARS or E-GARS model or same asymmetric volatility can also be tested in other sectors. Okay. So this is from my part. Now, if any from participants or from the host, please. Awareness, hello, त्यात पहिले किती फायदा नाही झाला का त्याची केलं join meeting में I have a फिर
Sir, can we start the session? Can you hear me?
Yes, ma'am. Yes, ma'am. Hello. Yeah. Good evening.
Participants, there is a technical issue in the institute. In another few minutes, we will be commencing the in a few minutes.
Audible to you, hello.
In another few seconds, we are going to start the session.
Yeah. Sir, Shanmugam sir, did you join, sir? Hello, Shanmugam sir is there?
I'm here, sir.
Shanmugam sir. Okay. Some network issue at our university, sir. That's why a few delay by a few minutes.
No problem. No problem.
2 minutes.
The purpose of education is to make good human being with skill and expertise. Enlightened human being can be created by teachers. Good evening, everyone. I'm R. Bhargavi, first year MCOM student from Department of Commerce, taking this opportunity to welcome each one of you to the validatory session of two-day national webinar on Indian stock market after COVID-19. The COVID-19 pandemic has led to a dramatic loss of human life worldwide and presents an unprecedented challenge to public health, food systems, and the world of work. The economic and social disruption caused by the pandemic is devastating. Tens of millions of people were at risk of falling into extreme poverty. Prayer is an invocation of the heart, a calling forth of divine energies to be manifested in one's life. We can start the program with Tamiltai Valtu.
நீராறும் கடலுடுத்த நிலமடந்தை கெழிலொழுகும் சீராறும் மதனமென தேவரத கண்டழிதில் எக்கணமும் அதில் சிறந்த திராவிடன திருநாடும் ஆற்றனை போல் அனைத்துலகும் இன்பமுற இசையும் தமிழனே
To mark the beginning of the program today, may I request Dr. Velmurugan sir seminar convener and former Dean of Commerce and Management, to welcome the gathering.
Very good afternoon to one and all present here in this valedictory session of the two-day national seminar on Indian stock market after COVID-19. Most respected Dr. Shanmugam, the former chief economist of Multi-Commodity Exchange and the present consultant at National Institute of Securities Market. Dr. Pattabhiraman Ramasubramaniam, faculty at Dr. MGR Group of Institutions, Chennai, and a former employee of Madras Stock Exchange. Dr. Dhanavanthan, the Deputy Librarian of Central University of Tamil Nadu. Participants from different parts of the country, research scholars and my dear students, very good afternoon to one and all present here. We all know that the COVID pandemic has made a very serious negative impact throughout the world, and academic institutions around the world, particularly in our country, have taken enormous steps to analyze the impact of the pandemic on the financial sector, particularly the stock market. However, very few institutions in our country started tracking the developments after COVID-19. What was happening in the Indian stock market? To take the initiatives forward from our side, from Central University of Tamil Nadu, being the Department of Commerce, which is specialized in securities market and the financial markets, we used to sensitize our students through our programs, which is happening at our department. Not only at our department, whenever there is a possibility, we used to organize several academic events, so that with the participation of students, scholars, and academicians around the country on various aspects, various developments that is taking place in the financial markets in our country, not globally. In that path, in that line, we thought we need to have a conference, we need to have a seminar on the developments that has taken place in Indian securities market from after COVID, particularly after COVID, which was not a case of interest for many other academic institutions. If you closely watch the developments which was happening during COVID, we know the market, like say, plunged throughout the world, irrespective of whether it is America or India, whatever it is. There was a serious impact, negative impact throughout the world, and everyone had a serious impact because of COVID, and in all parameters on all walks of our life. And everyone know we were able to accept the impact in financial markets, particularly in stock, bond market, stock market, and other like, except a few commodities like crude and gold. Wherever there is, particularly gold. However, after COVID, many developments has taken place in the stock market. One is the outcome of the co-location scam throughout the, which has shook the stakeholders, public, bureaucrats, politicians. Not only in our country, around the world, they started talking about what is happening in India, in the Indian stock market. What was the impact of that particular instance in the stock market? Secondly, if you closely observe the new issues that has come up after during the fag end of the COVID pandemic period and after the COVID pandemic, because we are calling it after the pandemic period, because government itself has publicly announced that India, our country, is out of the implications of the COVID pandemic. So many new issues has failed. It's like the market capitalization on the day of listing of the new issues saw a serious fall, not in 1 or 2%, huge fall in the market capitalization of and like say the price of shares of many companies, which has affected particularly the retail shareholders, retail investors of the country. On the other side, a lot of selling from the foreign institutional investors, foreign FBIs, there was a continuous selling, in particular in some sectors, there was a serious selling and they started taking back their investment in this particular situation, there was a serious, there was a sharp fall in the Nifty and Sensex also, which is close to from the peak of 65,000, 60,000 plus points. Today it's around 52,000 points. So, which means there is a 10 plus percentage of fall in the Sensex and Nifty value. All these things make us to understand that some disturbing factor is there in the Indian stock market, which we thought rather than discussing among faculty members with the students, we will take it forward at a pan-India level in the form of a seminar, which we wrote up as a project to ICSSR. Southern Region Chapter was very kind enough to consider our project and has gave us some seed money to go ahead with this 2-day seminar on Indian stock market after COVID-19. We made a call for papers and participation, and there was a good number of interest shown by academicians, particularly MPhil and PhD research scholars across many universities and colleges in this country. And as far as papers, we got exactly 60 papers on COVID-19 and its impact on Indian stock market. Most of them did a pre and post comparison and on different aspects they were doing that. We formed a committee of like say academicians to go through the papers, to review the papers, whether they are fit enough to be taken up for presentation. And they said exactly around 10 papers were dropped and 50 papers were presented in 10 sessions, I mean technical sessions yesterday and today, chaired by very reputed and senior professors from Central University of Tamil Nadu. So altogether 50 papers were presented, and even before this presentation last week, we shortlisted 19 papers, 19 papers, which I mean as per the session of ICSSR, we wanted to take it for publication. 19 papers were taken off for publication. We thought of releasing the edited volume of that 19 papers yesterday, but due to want of time, paucity of time, and the delay from the publisher side, maybe it will be released this week or in at the maximum 10 days time. So the deliberations, from the papers presented and from the very resourceful, resource persons who addressed the seminar, this was happening parallelly. On one side, paper presentations were going on yesterday and today after the inaugural session, and parallelly resource persons were also addressing the participants and our students from all leading exchanges, from NISM, from NCDX, from MCX, from Bombay Stock Exchange and Metropolitan Stock Exchange. Resource persons were addressing the participants, and we were able to understand what is the developments that is going on in the market. So the participants understood, and they also listened to the presentation of the research paper submitted by scholars. So this was the whole thing that was happening for the past 2 days. And as a convener of this 2-day seminar, though it is an online seminar, I personally felt that a person who has organized several events, I personally felt that it was a wonderful event, systematically organized, and I'm really happy that the purpose for which the seminar was organized, we were able to achieve that. And now we are into the valedictory session. For this valedictory session, we have a very, very reputed chief guest, Dr. V. Shanmugam, who is presently the consultant for commodity education cell at National Institute of Securities Market. Prior to which he was with Nomura Consultancy Services and with Multi-Commodity Exchange as its chief economist. A person who has a very rich experience in the stock market, in the commodity market, particularly in the financial affairs of the entire world markets, I would say. Besides, above all, a person who used to motivate me, who used to be, who is associated with me for a very long time in all my academic activities. Instead of saying my academic activities, I would say almost from 2009, it is 14 years now. He is associated with all the academic events from Pondicherry University to Central University of Tamil Nadu. and he is also a member of the Board of Studies, Department of Commerce, Central University of Tamil Nadu. We are happy to have you here, sir. Thanks for joining us today in this validity session. We also have today Dr. Pattabhiraman Ramasubramaniam, yet again a very senior person from the financial market, experienced person in the financial markets, who was with the Madras Stock Exchange for a long time and with Apollo, earlier with Apollo Stock Trading, which is a broking agency for a very long time, and later he has taken up academic assignment with Dr. MGR Educational Institutions, Chennai. And a person who is also associated with all the academic activities of myself and the institution in which I am associated. Thank you, sir, for joining us. Dr. Pattabhiraman, sir, yes. Thank you for joining us.
Yes, thank you. Thank you.
Yes, welcome you, sir. We also have from our university side, the Deputy Librarian of Central University of Tamil Nadu, a very dynamic academician, as well as a librarian who has raised the library of Central University of Tamil Nadu to felicitate in this validity session. I also welcome the participants and students, research scholars who are joined in this validity session. Thank you for this opportunity. We can proceed with the other resource persons now. Thank you. Go ahead.
My wish isn't to mean everything to everyone, but something to someone. Here, I invite the Dr. Pattabhiraman Ramasubramaniam, Professor of Department of Management Studies from Dr. MGR Educational and Research Institute, Chennai, to felicitate the occasion by his words.
Good evening to one and all. Yes, Dr. Vel Murugan was saying that we were associated with all the academic programs, but actually for some of the programs and other things, still I remember that we were giving a lot of ideas and other things. And our topic is with regard today is Indian stock market after COVID-19. But today, you just see the thing, today also the market has fallen. Today, all the speakers were eminent speakers. They have spoken about a lot of things. But today, I'm going to just say only a few things for that, because we have come to the tail end. Always remember, my boss used to say in my stock market, Mr. E.R. Krishnamurthy, the executive director of the Madras Stock Exchange, as well as Mr. Maya of the Bombay Stock Exchange. They always used to say that because only the upper and the lower thing you cannot predict, only nature or the God can predict. That's what he used to say. Clear? He always used to say, put the stop loss. Whoever is the thing, because whenever we see a huge position or something like that, especially Mr. M.R. Maya, he used to call me over telephone, because he will just say, because both the companies will be listed in both the stock, a company may be listed in both the stock exchanges. He used to say that, yes, please do this, all these things he will just say. And this is very, very vital, important, because we cannot predict, because nowadays it is not inherent within India, within the economy. It is throughout the thing, because like the water finds its own level, it's virtually impossible. Therefore, one of the best things that we have to do is to put the stop loss. It's very, very important. Any of the things we cannot predict, because when the equity market trades 10 times, commodities market will trade 40 times, foreign exchange market will trade 100 times. Clear? For a child, what is happening from the time we are born till we leave the world, we have to give any of the commodities. Clear? You can see what is happening in Sri Lanka. Clear? Similarly, here, what is happening here? That means the commodities market, they will trade 40 times. And the currencies, right from day one, it will be there, whether it is electronic form or anything, there will be a lot of demand for that one. So this is very, very important. And also, again, see the circumstances, because nowadays the circumstances are going beyond our boundary. Nobody is able to predict. Therefore, you always see what is happening around us, and let the buyer be beware. That means the stock market investors have to be beware. Otherwise, because it is your own hard-earned money, and if you lose it, nothing can be done. Very, very difficult also. Always we used to say the 4 P's must be seen: product, promoter, price, and profitability. But whatever is the thing nowadays is very, very important. The new age companies are also now trading much higher. Even in America, it's trading. Here also in India, it is trading. So go according to the market. Go what is happening there. Then only we will be able to predict. On that basis, we'll be able to do that one. And this 2 days program, lot of innovative things have come. 50 papers have been submitted, 19 have been submitted, but those who have been rejected, please also understand there will be a standard. That we have to follow certain standards. We have to maintain the standard. University has to maintain the standard. Your research colleagues have to maintain that standard. That is the thing, because it's just like it's a stepping stone for success. Clear? Please do the hard work, do that research analysis. Please understand, we cannot even serve one street. That's the status today. Because with this kind of inflation, unless we invest in the stock market, we cannot do anything. Employer cannot pay. And again, with the skill development that is going to take place in our new education policy, that will that area will also come down, or something like that. Means the remuneration that is coming from that area will come down. Naturally, we have to be alert with the stock market. Even the companies that have hedged in the commodities market, they perform well in the equities market. Even some of you can also take up that analysis, because we found that those companies who hedge their position in the commodities market, their positions are well, their positions or their stock prices are up. So naturally, please, this is a huge area, and it is like a ocean. Unless we thrive, unless we try to come up, I think it's impossible. Clear? We have to do that one, and it's a huge area, and also you can also make money, because there are plethora of opportunities in the market. We should not leave it. And also, I really thank our VC, Central University of Tamil Nadu, Dr. M. Selvam. Similarly, all the speakers from NISM, NCDEX, Metropolitan Stock Exchange, BSC, all the people, and also Nagarajan, again Chandra Mohan, and finally our Dr. Vel Murugan is really dynamic, sir. It's not that we know that one, because whatever we say, whatever we discuss, he always implements it within a short span of time. And not even a day, you will immediately grasp it and do that one. So the function has went off well, and all the best, and all the best. Any of the things that are there, please write to Dr. Vel Murugan or write to me. I'll be able to help you out. Thank you.
Thank you very much, sir, for sharing your thoughts with us. Next, I invite Dr. Dhanavandan sir, Deputy Librarian and Central University of Tamil Nadu, to felicitate two-day national seminar. Dhanavandan sir, can you hear us?
Yes. My voice is audible?
Yes, sir, you are audible.
Yes, sir. Yes.
So first of all, good evening to one and all. My best wishes to the entire team, the organizing committee, including Professor Vel Murugan sir and his team, for this wonderful success of this 2 days ICSSR and SRC sponsored national seminar on Indian stock market after COVID-19. So there is no doubt it is a wonderful program. It is definitely we need to discuss about the stock market, especially on the period of after pandemic situations. So after the pandemic of COVID-19, almost people are moved to the online payment on the stock exchange little bit. But the online payment is more, reached to the entire public. But the stock market maybe in there some fluctuations. But so as my opinion, the people from the liquidity market, that is people by using online payment, they need to have some financial literacy, because after especially on this pandemic period, the people almost moved to online payment, UPI, and like various payment methods. So definitely the people will need financial literacy. Usually, what is financial literacy? So it is nothing but it is a confident understanding of concepts including saving, investing, and debt that leads to overall sense of the financial well-being and self-trust. So the people will have a knowledge on financial literacy. So without the people cannot survive after this pandemic period, because almost all the people are moved towards the online payment and various financial transactions. So definitely people will need the financial literacy. So right now in India, as you are aware that Kerala is the highest literary rate in India, but it is the second highest level of financial literacy among the states in India, like Goa, Manipur, and Gujarat. Almost all the states, they are having the financial literacy like 50%, 30%, 33%. So recently, one report I have read about, the SEBI report, it shows the overall financial literacy rate is 27% in India. So what it shows? Usually the financial literacy concentrate on 5 areas. I mean, earning, spend, save, invest, and borrow, and protecting. Protecting means savings of the amount. So usually when the people are using this, having this financial literacy, they need to procure the 3 components. What are the 3 components? One is up-to-date budget, and another one is dedicated saving or spend to savings. So as a commerce people from the commerce, so you know very well what is up-to-date budget and savings. And the third one is ID theft prevention. What is the necessity of this ID theft preventions? Especially after this pandemic period, almost people are using or moved to financial that is online payment and in various aspects like UPI on net banking and other GPay, Paytm, like a variety of the payment methods. But even though they have some issues, especially on theft oriented aspect in this online transactions. So the people from, especially people from rural area, the people from small budget, I mean small, medium, business people. So earlier they used the liquidity cash like petty cash and all the things, petty shop, for example. Now almost after this pandemic situation, they moved to the online payment. Even though the people will have, they need some more literacy, especially on this aspect of financials. So as you are the commerce student or from the commerce expert, subject expert and everything, so you have to create, you have to concentrate on the rural public people to create the awareness to or improve the financial literacy rate by using of various kinds of programs, various kinds of activities like this kind of seminars. So pandemic is that after, especially the academic people is not affected the pandemic after 19, but the rural people, those who have the financial crisis, people are moved to that financial, I mean, various kinds of online transaction. So definitely to avoid various kinds of issues, they need to some more awareness, some more alerts. So it is my opinion. So all the people from this, your profession and your expert, I mean, subject expert from the all the business oriented people. So you have to create the awareness to the, especially to the also. So thank you for inviting me to for this validity functions. So also this is I hope conference will discuss various issues, especially on this Indian stock market. So definitely I think you will get more information, more discussion and deliberation, everything. So thank you. So my best wishes to the once more time, best wishes to Professor Vel Murugan sir and his team for this wonderful conference, for this such kind of conference organized frequently. So there is no doubt this is the only department in vibrant department in CUTN. So it organized various programs to encourage the people, financial oriented aspect, stock market, business oriented people, small scale industries, and very different variety of programs are organized by the commerce department. So my best on behalf of myself and Central Library from CUTN. So my best wishes once again. Thank you one and all for inviting me and giving me the opportunity to felicitate this function. Thank you.
Thank you, Dr. Dhanavardhan. Thank you for your valuable, observation about our department and our program. Thank you so much.
Yes, thank you.
Grateful to you, sir, for conveying your message to us. May I request any participants, any 2 or 3 participants to give feedback on two-day national seminar?
Let them raise their hand. And then you can call them one by one. Only two of them.
One of them can raise the hand. Any 2?
Yes, may I?
You can proceed.
So, good evening to everyone. My name is Shiva, research scholar, first year research scholar, Department of Commerce, Central University of Tamil Nadu. So, firstly, I would like to thank the entire team of organizing this conference, especially great personality conference convener, Dr. Venmarkan sir, for giving me the wonderful opportunity to participate in this conference. So, this is a well-gone conference. Since yesterday, so we were attended many technical sessions as well as many presentations. So from those, as a beginner of research, a researcher, I have learned many things from those technical sessions, which was given by many exchange experts, like you can say BSc from BSc, many commodity exchanges. So they have given their valuable inputs. So this really helps to me, and for further my studies also, it may be helpful to me as well. From many presentations, I have learned many things and I gain know much knowledge. So I was observed that how this impact of COVID-19 was impacted on Indian stock market. So as well, so I have observed that during these type of situations, so how can we get strategies and risk management, those things. So once again, I would like to thank for all this entire team of conference. Thank you.
Is there any other participants who are willing to give feedback? I'm repeating again. Is there any other participants who are willing to give feedback? Yeah, sir, you're audible.
Yeah, I'm Dr. Kubenjan from Department of Economics of Pondicherry University. And I would like to thank Honorable Vice Chancellor Velmurugan sir, the faculties of Department of Commerce and students of getting a lot of echo. Students of the Department of Commerce, volunteers and others for conducting such a wonderful event, wherein which all the scholars, paper presenters gave fruitful discussions. I have enjoyed this program immensely in the past 2 days, and the speakers, everybody gave a lot of insights, information about stock market. So I enjoyed the program thoroughly. Thank you, Velmurugan sir, for your interesting program and bringing all valuable informations through these discussions and eminent speakers. Thank you for conducting events in a structured way.
Thank you so much, sir. Thank you, Dr. Gurvendra, for a valuable input. Thank you.
Thank you, sir. Thank you for the feedback. Now, we move on to the next part, that is validatory address. We have excellent personality who is well versed in stock and commodity market, and he is Dr. Venkatachalam Shanmugam, who has completed his doctorate of philosophy in agricultural economics from Indian Agricultural Research Institute, New Delhi. He carries with him an experience of around 22 years and was last associated with Multi Commodity Exchange of India as Head Research and Index Administration. He had association with various financial organizations like Nomura Research Institute, FinTech India, MSEI Private Limited, and United States Department of Agriculture. Sir, we the students and organizing team of CUTN wish you a very happy birthday.
Thank you, Bhargavi, for the kind birthday wishes, and thank you, Dr. Velmurugan, for felicitating me on this occasion.
Yes, yes.
By
We
inviting
are
me
so
to
we,
the
we are really happy that this validity session is happening on your birthday. We are really feeling happy, sir.
Thank you, sir. Thank you for having me with you all today in the today event. And unfortunately, I had been traveling yesterday and not feeling good, and I couldn't attend the event fully well, actually. But in fact, any of the research events I happily attend because I'm more oriented towards the um, research oriented walks actually. So anyway, so thanks a lot, Dr. Velmurugan, for kindly inviting me, and thank you to all the students and organizers of this event. Actually, and this is pretty much needed that we do have to research what is happening in the financial markets. Actually, so oftentimes we look at some of the indicators, and beyond that, we just forget about it. What is happening, and this is exactly what was there, in the research that has come out post the COVID. But I just wanted to put few of the numbers in front of you so that you can look at this, think about this, and later at some point in time come up with research which can tell to the larger policymakers and the public as to what needs to be done. In 2020 March, post the COVID lockdown was announced, the level of Nifty was at 8,080. I'm sorry, I'm using Nifty because that's one of the most traded indices. So I prefer to use Nifty always. So it was at 8,080. It plunged to 8080. That's how I would say that. And in 2021 October, it raised to 18,000. So that means there is a 120% increase in the stock prices actually. And then now in 2022 June, it came down to 15,300 levels actually. So that's exactly what has happened in Nifty. So nothing has been lost in terms of wealth that was invested, prior to 2020 March in October, and not much would have been lost if people would have kept their position in the market open till now. Actually, that's something which we need to understand. So pandemic has not wiped out any of the wealth of any of the investors who would have invested maybe in 2019 or 2018, and not much would have been lost in there. Number one. Number two, we need to do uh, research in terms of when pandemic struck us, which are the sectors which are vulnerable to the pandemic that that led to the lockdown and that led to the reduction in the productivity. But on the other hand, that has thrown new opportunities to the new sectors. So which are these new sectors? One new sector is the IT, so the information technology. Thanks to the information and communication technology, this entire conference is happening. Forget about every other thing. This entire conference is happening. And thanks to this information and communication technology, almost 70 to 80% of the work that was involved in either the service sector or the manufacturing sector were going on smoothly, and so thereby they were churning out the economic output over a period in time actually. So IT as a sector was a winner out of the COVID. So that is another thing that has happened. And will it again be a laggard post the COVID? Will people go to office, and when they start working, will it be a laggard? No, it may not be. It need not be actually. So this conference itself is a proof in point that people can be connected over using the tools of information and communication technology, and so thereby knowledge can be disseminated across the country regarding whichever the topic that one would want to talk about actually. So IT. The other one is the pharma sector. The pharma sector is I'm sorry to mention about this, but that the pandemic struck us. Pandemic, impacted us a lot, and we had to go to the hospitals, we had to get treated up, we had multiple kinds of impacts on our public health actually, and that led to umpteen amounts of demand on the different types of medicines that are produced and things like that. So in fact, when I think about when the pandemic struck, I mean, there were a lot of WhatsApp messages that came up, when during the first wave we were not that much impacted and things like that, there were no accidents in the road, but there were no accidents in the road, but the economy went down, and there was no demand in the hospitals because people were more aware about the safety, people were keeping them sanitized, people did not move out, there was no pollution. Okay, fine. So these are all good to some extent, but not to a greater extent actually. And we have to move out. We need to mingle with. We need to get a part of the economy so that we produce the output that is needed in the economy for it to grow. So that's number one that I wanted to say. So the Nifty, which at the time of lockdown plunged down to 8,080, went up to 18,000 when the second wave started petering down, and from 18,000 it came down to 15,300 levels. And why did that happen? So as economists, as researchers, you should always be aware about these numbers actually. During the quarter ended July 2020, the economic growth was minus 23.5. So the market nearly panicked. The market nearly panicked basically because market was not sure when the lockdown will be removed, when the prices, when the economic activity will start going up, when the normal economic activities would start shrinking up and things like that. And so that way there was a panic, and that panic, when it was revealed or when it was put into the market, that resulted in the plunge of the markets. So the Nifty went down to 8080 post the lockdown. In July 2021, it went up to 20.1%. This is quarter over quarter percentage actually. So 20.1% growth quarter over quarter in just 1 year. So no wonder that Nifty went up from 8,080 to 18,000. So there was an economic growth. Nifty does move along with it actually. And then, the Nifty is now going down to 15,300. And that's basically because the Indian economy is forecast to slow down to 4.1% in the quarter ending July 2022, actually. So this is something which is important for you as researchers, which you should know. So what has happened, in between 2021 and 2022, the second wave was over. People were thinking that the third wave is going to go up. But don't worry, third wave has not, peaked up anywhere. There was no peak theory of COVID in the third wave and things like that, actually. But on the contrary, what is happening after the second wave of the COVID, there was a calculated entry of Russia into Ukraine because of whatever that was happening. Because I am not a political commentator, and I do not want to also make any political commentary here as well. Because what was happening is that Russia made a calculated entry into Ukraine, attacking Ukraine with a strong buildup of the troops and things like that. Actually, because Ukraine was under the verge of joining European Union and thereby becoming a member of NATO over a period in time, inviting the NATO forces to the border of Russia, actually. So this got Putin impacted, that I would move into Ukraine to see to it that I would teach the other countries which are on the border a lesson so that they don't look at joining EU at all, actually. So that happened in 2022. But remember, nobody ever thought that this would have a huge impact, of a much higher impact that even the COVID could have left in the markets. Actually, that's basically because of the higher concentration of the commodities that are there in the hands of Ukraine and Russia. So Russia today supplies around 30 to 35% of the gas and crude oil, almost 30 to 35% of the gas and the crude oil, and a third of ammonia and potassium, which are the two key ingredients of fertilizers around the world. The global supplies are made with by Russia, which is 33%. And coming to the agriculture commodities, wheat and barley, Russia and Ukraine put together command about 30% of the global exports. And Ukraine and Russia put together contribute about 65% of the sunflower seed oil and 15% of corn exports to the outside world. So this much of food grains and this much of energy and gas, this much of crude oil and natural gas, and this much of ammonia and potassium, which is necessary for fertilizers, and much of the other metals such as palladium, such as lithium. And you won't believe that one of the steel plant in Ukraine was a significant producer of neon. And I didn't know that until that point in time. Ukraine was that steel plant from Ukraine was a big supplier of neon. And neon goes to where? Neon goes to the chip making industry. What do the chip making industry do with neon? Neon is a gas which is used in laser, and that laser is used in chip printing technology actually. So with neon getting out of the market, so even chip making facilities will have some trouble in procuring neon from outside of Ukraine and Russia from there on actually. So that is going to leave a much higher impact on the markets, which is the post-COVID Ukraine-Russia invasion actually. So I think, I mean, that throws another topic for Dr. Velmurugan to do, another conference which is on the post-COVID impact or the post-Ukraine-Russian invasion on the global economy. And
Sure.
joining with
Yes, sir.
that, yes, sir. And joining with that is the Federal Reserve action that has happened yesterday, which is 0.75 percentage increase, which is much, much even higher than the percentage increase that I would have seen in my life, even with respect to Indian markets, actually, which is 0.75% actually. That's an unprecedented increase, but not an unexpected increase. And markets have already, squeezed in that particular, interest rate increase into the markets. And that, if I can actually connect it to what Dr. Wilmorgan had said, that is that it strengthened the dollar, and that actually pushed the money from India. So how did that get pushed up? Because the people who have invested in the Indian markets now would want to sell it and and take it away from the Indian markets. And when they were selling it, people should be buying it in the Indian markets. And thanks to all the efforts that the government of India had taken during the last 3 to 4 years post the demonetization era, as Dr. Dhanavanthan had indicated, that it had led to people saving more of money in the banks, and the banks had access to the markets, and the markets had much easier access actually. So the markets had much easier access thanks to the fintech, inventions that has happened. You have the Grow, you have the Upstart, and you have the various other app-based investments that have come up in the markets, and that has actually given access to the common man to the stock markets actually. So as a result, not only that the fixed deposit interest rates were low at 3.5 to 4% in the banks, but also that people have started searching for better returns from their investments, which the stock markets were giving. Almost, you could have seen 8,080 to 20, 18,000, and now at 15,300. So that's the kind of return that the stock market had provided during that particular period in time. So the retail investors have started pouring into the stock markets. But have they done it well? Not all of them have done it well. Some of them may have won it, but many of them may not have won it actually. And so, what is the other way to do it is through the mutual funds, because it is a well researched investment that is being done by people who are in the markets with the expertise in the markets. They are doing it on behalf of you, but at a small piece of cost to you actually. So either you do it on your own or you leave it to the people who would want to. Okay, coming back to the Fed, action. So knowing that Fed is going to act upon, RBI had raised the rates by 1.35 percentage actually during this particular point, period in time. No, sorry, 0.9 percentage, which is 90 basis points, 40 basis points now, and 50 basis points then. And maybe going forward, it may actually raise the interest rate further forward if the inflation were to remain, higher even then actually. So let's get back to what was the inflationary condition when we were getting into COVID, and when we were, after the COVID, let's say in the beginning of 2020, 22, and, what is now actually. At the beginning of the COVID, because of one shortage of commodities and ability of the people to make it to ability of the commodities to make it to the people, the prices of the commodities went up actually, and that led to an inflation of 6.7% in April 2020 in India, and April 2022 it did not jump up as much high as it was in America, but it did go up from 6.7% to 7.8% actually in April 2022. So 6.7% to 7.8%. But in all the while, the inflation has been persistent, and RBA has been, persistent in terms of its interest rate, keeping the repo rate at 4% actually. But all the while, as the inflation started peaking up, touching 8% and then coming down to 7.8% on April 22 and things like that actually. So that was the time when the monetary policy, committee had decided that we should increase it now by zero point 0.5 or 50 basis points, and now we should increase another, 40 basis points actually. So that's why you have now the repo rate at 4.9%. But the inflation seems to have cooled down in India, at least for some time being, from 7.8% to 7%. And there is a lot of talk which is going on whether is it because government had held up the increase in the crude oil to be passed on to the markets and things like that actually. So that is one thing which is which is going on in the in the debate among the analysts and the economists actually. Will this inflation rate 7% remain persistent, go down, or maybe at a point in time it may shoot up? Maybe it may shoot up. You never know, because the government had decided to keep it at the cut down on the excise rates and other this one, and so thereby the petrol and diesel prices could go down, could go up basically, because now that Russia had said that no more cheaper supplies of crude oil to India. I don't know whether it is cheaper or less costlier. There is a difference between less costlier and cheaper version. It's not, if today is 120 is the crude oil price, it may not be 60. It may be somewhere around 90 to 100 levels at which Russia may be supplying. But recently Russia seemed to have said that no more cheaper supplies of crude oil, because what I am suffering, what my army is suffering, let the world also suffer. So I'm not going to supply crude oil to India, maybe at a cheaper price. So maybe as Russian, words get into action, India may have to be pushed into the global market, and so thereby India will have to compete with the European market or the demand from the other markets in order to get the global crude oil actually, and so thereby diesel and petrol prices may go up in future actually. So that is the point that I just wanted to tell you, that in the stock market, if you have to keep invested in, you need to follow the three P's, which is patience, because you have seen those who have sold at 100 rupees prior to the lockdown, thinking that lockdown is going to, create a lot of wealth decline in their investment, would have been defeated because they saw their wealth had got declined, basically because inflation was at 7% and the interest rate that they got was just about 3.5 to 4%. On the other hand, if they had kept invested and kept more investment into the market at the level of 80, they would have seen the level of 18,300, and so that would have supported not only the Indian market but also their own wealth as well, actually. Patience. The next one is perseverance, actually. Keep trying for more and more research into the markets, know more about the markets, which sector is going to do well under the current conditions, actually, which sector is going to earn better profits for you. Get into to invest in those sectors, and so thereby you will be able to make up for the loss that you may be booking in one sector for the from the profits that you would be earning from the other sector, and so thereby the overall portfolio returns will be much better. That is within the stock market, the sectoral allocation. The third point is that portfolio diversification is very important. So patience, perseverance, and portfolio diversification, which is if you had included crude oil, which went down to the negative territory of about minus 40 in April 2020, is today minus 40 to today at 120. Think about the kind of increase that would have. So minus 40 to 120 is 400 percentage increase in crude oil. One who had invested 100 rupees in crude oil at that particular point in time would have earned 4 lakh rupees by this time at 120. Had anyone invested, many would have invested. Who that many would have? Maybe the richest of the rich who had the access to the derivative market, who had the knowledge about the markets, who had the risk and perseverance in the markets would have got invested. Had you invested a little bit of money into the commodities, not only the crude oil, the gold went up from almost like 900 to 1000 to 1800 today. So the gold, to crude oil, to aluminum and copper, even the agricultural commodities, went up, you know, very high during this particular period in time. So just to give you one number, S&P, which is Standard and Poor's Goldman Sachs Commodity Index, was quoting at 1,400 level in March 2020. And in June 2022, 1,400, you just change the number 4,100 level. So which is more than double the kind of, or more than triple the kind of levels that were, that could be seen in the market actually. So one who had got invested in commodities or at least in the index would have got a better return actually. A little bit of a portfolio diversification, as was indicated by Mr. Patabi Raman in his speech, could have been more helpful towards other sectors, not only towards stocks, but also towards commodities. And at this particular point in time, when the interest rates are raising, who are the winners? It's the banks who are the winners. It's the debt instruments who are the winners. So you should be invested more in the financial sector. You should be more invested more in the debt instruments, and so thereby you would be earning a little bit more from the developments that are happening in the markets actually. So that's another thing which you as researchers would have to keep on enriching the knowledge of the common people, so that our investors in India become more rational and wise investors, and and India as an economy grows on a vibrant path actually. With this, I do not want to bore you with much of my knowledge, but again, once again, I want to thank CUTN and Professor Velmurugan for the opportunity that you have provided me to participate in this conference. And I'm sure maybe there will be another occasion where we will meet up again as to what has happened, after the Ukraine-Russia war had completed, and the world is reneging on what is the action that they want to take on Russia, and what is the impact that Russia is going to keep happening on the global commodity markets. Is something wonderful to see, and it's going to wind up in front of us in another 1 or 2 years. Let's see how that is going to happen. Thanks a lot again to all of you for patiently listening to me, and keep in mind these 3 P's: patience, perseverance, and portfolio diversification. That's it. Thanks a lot for the opportunity once again. Thank you, sir.
Thank you very much, sir, for sharing your valuable thoughts with us. Now, may I request Ms. Srilakshmi P., student of Department of Commerce, to give vote of thanks.
A very good evening to all. It gives me an immense pleasure to deliver the vote of thanks for this event to all dignitaries assembled here. As William Arthur Watt rightly said, feeling gratitude and not expressing it is like wrapping a present and not giving it. I take this opportunity to express my deepest sense of gratitude and appreciation to all those made this seminar such a resounding success. In the beginning, I would like to thank Professor M. Selvam, Vice Chancellor of Bharatiyar University, for being with us and inaugurating this seminar by taking his time out amidst of his busy schedule. I wish also to record our sincere appreciation to Professor Dr. M. Krishnan, Vice Chancellor of Central University of Tamil Nadu, for delivering presidential address in our inaugural session. I sincerely thankful for our resource persons, T.G. Senthil Velan, AGM BSc Chennai, Kapil Dev, Chief Business Officer NCDEX, N.K. Mustafa, AVP and Head Business Development MCX, BM Khaja Moeddin, Assistant Vice President MCX, for their fruitful session. Further thankful to Professor Sulojana Shekhar, Registrar of Central University of Tamil Nadu, and Professor A. Chandramohan, Dean, School of Commerce and Business Management, and Dr. A. Vinodhan, Head of the Department of Commerce, for felicitate our inaugural session. I wish to thank Dr. Pradeep Tarathi Pandey,
Thank you
LIA
so
from
much, sir.
Mumbai,
Thank you
for
so much.
delivering
Definitely,
excellent keynote address.
we may get an opportunity to discuss when you visit for our board of studies meeting. Thank you.
Next, I would like to thank Dr. V. Shanmugam sir for delivering valedictory address, and Dr. Pattabhiraman Ramasubramaniam sir and Dr. Dhanavandan sir for delivering felicitation. I am further thankful to Dr. Velmurugan PS, our seminar convener, who has always been a greatest support behind all events. We are also thankful to all persons chair the presentation for all the panels. Thanks to the faculties, research scholars, students, staff, and non-teaching staff from Department of Commerce, Central University of Tamil Nadu, and I am especially thankful to those members who have been associated with the organizing committee since a long time. And I am also thankful to the IT section in Central University of Tamil Nadu for making the seminar to a success. Above all, I am thankful to all the participants in the national seminar, as your participation had made this seminar a successful event. I believe that this seminar has certainly provided an insight in the topic of stock market after COVID-19. To conclude, once again, I reiterate gratitude to all. Thank you.
Thank you, Sri Lakshmi. Now we will close our session with National Anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे, तव शुभ आशीष मागे, गाहे तव जय गाथा। जन गण मंगलदायक जय हे भारत भाग्य विधाता। जय हे जय हे जय हे, जय 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 हे।
So we'll close and we'll meet now. Thank you so much.